Hello, hello, hello. Hope you can hear me loud and clear, everyone. All right. Good afternoon, good morning, good evening, depending on where you are catching me from. All right. Welcome, everyone. Just want to check if you can hear me loud and clear. Please just write yes in the chat if you can. All right. All right. Looks like it's okay. How many of you I know many of you are joining me from late hour zones, like if you are from the US or the North America side, or maybe very early in the morning if you are from Europe. And I really appreciate that. And thank you for tuning in, and thanks for your overwhelming support and your commitment as well to use your weekend time to learn. Yeah, I'm very glad that you are here today, whether you've been trading for 20 years or you are completely new to options and just starting to explore. This session is designed specifically for you. And I can't wait to share my knowledge with you. I trust that you had a good day yesterday. Enjoy what Adam and Alson talked about, and earlier today as well, as Adam touched on the options as well. My name is Bang. I'm a humble retail trader like many of you, right? And over the next, hopefully 2.5 hours, I'm going to show you exactly how I use options to generate consistent income in bull markets, bear markets, or even in a completely flat sideways markets. No guessing, no stretch, no flush. Just a systematic, repeatable process. But before we get started, just a quick note. Please keep the chat active throughout the sessions. Right? So we have Q&A, we have chat room there for you to put in. If something isn't clear, type your question right away. I will have a full Q&A session towards the end, but don't wait. You can write it as long as you have the questions. And I also recommend you to grab a pen or piece of paper and take a lot of notes along the way, because it's going to be a content-rich session. All right. Before we dive in, our standard disclaimer. Everything I share today is purely for educational purposes. Fiona Profits and myself are not licensed financial advisors. And we know that trading involves risk, including the risk of losing all the capital. Nothing I say will be taken as a personal financial advisor or advice. So please just, do your homework, due diligence before you take any trades. Now, earlier today, Adam has explained the concept of call options and put options and buy and sell. And he also briefly explained the concept of a few option strategies that he used very often. And that makes my job now much easier. Right? I don't have to cover everything, but I will, summarize the key concept. He also talked about how powerful option can be if you know how to use strategies properly, both investors and traders. And if you heard about options for the first time today from Adam, and you could understand 50% of what he said, I can tell you that you are a genius. If you could understand only 10% or 20% of what he said, you are completely normal. It took me many years to really understand how options work and also master it. And don't worry, I will share that we have designed our program in a way that we will hold your hands step by step so that you can understand as fast as you can. Yeah, so here's what we're going to cover today. First, I will show you why options are the most powerful tool a trader or investor can have in this market environment. Second, I will walk you through a strategy called Profit Box. It's a proven way to generate income in a sideways market without having to predict where the market will go next. Third, I will share 3 trading ideas using this exact strategy. And I do plan to enter those trades during my live trade hunt session on Thursday. So keep note that I will have a live trade hunt webinar on Thursday as well. So I prepare a few trades for it, including the 3 that I'm going to share today. And finally, we will close with a live Q&A session where I will answer questions directly. So by the end of the session today, you will understand exactly how to build a profit box around a stock or an ETF, collecting premium upfront and profit even when the market goes nowhere. So let's get into it. All right. But let me just tell you a little about who I am, right? For those who don't know me, and more importantly, why I believe this strategy can work for you, right? Like it worked for me. So I am a humble retail trader. I spent 28 years in a corporate world as a group finance director for a Fortune 500 company before I retired several years ago. I know what it's like to be a busy professional, long hours, you're very demanding responsibilities, not enough time for personal thing like trading or spending in front of the trading screen. I've been trading now for 25 years, including 20 years trading options. So before that, obviously, I traded stocks. Yeah, but I stopped after I knew options. And over the past 9 years, I've been coaching many option traders in this Piranha Profit community. I've seen what works, what doesn't, and I have spent 2 decades refining my trading system that generates consistent returns for me. And it can be done in any market environment. All right, so that's a brief introduction of myself. So let me start with a question here. Why do I prefer options to stocks? Remember, I started with stock 25 years ago, but the moment I discover options and understand how it works, I switched to options and never look back. Well, with stocks, right, you can buy stocks, but you will need a lot of capital to make a decent, return or absolute profit. And you can only profit in one direction only. When you buy stock, the stock has to go up. If it goes sideways, or even worse, if it goes down, you are stuck waiting or lose your money. Options are completely different. With just a fraction of the capital, I can generate income in any market. Up, down, completely flat, as I said. I can also protect my portfolio from market crash, and I can generate extra income from stocks that I have already owned. For the stock I have not owned yet, but I like it, right? I can also place an option trade to potentially acquire the stock at a discount. Right? So options give me flexibility that stocks simply cannot provide. And for busy professional who doesn't have hours to spend at the trading desk, option strategies like the one I'm going to show you today can be managed as little as like 50 minutes or 30 minutes a day. That's it. You don't have to spend hours. Now I want to show you something. I'm going to share my actual trading results, right? Using the real screenshot, real numbers, right? Real accounts. Let's start with my first account. So I have multiple accounts, but I will show you three biggest one because each of them is around $1 million or more than $1 million. The others are small. So first account, my Interactive Brokers account here. In the past 1 year, I got $250,000 profit, 29% return in 1 year, and slightly ahead of S&P 500 for the same period of time. So it's a decent profit and return. The second Interactive Broker account I had, where I rake in about $110,000 profit, 8.44% return in 1 year. So obviously this one is behind the S&P 500 return, right? But it's still much better than fixed deposit or bond return. So this one obviously underperformed the market. And my Thinkorswim account, I got $452,000, 35.3% in 1 year. Yeah. So if you combine three accounts on together, I have generated over $800,000 profit in 1 year with an average return of 25.24%. Now, I wanted to share with you as well today with the year-to-date number for 2026. And I waited until the last day, which is last Friday, and then I tried to pull the number during the weekend to show you. Unfortunately, my broker platform was under maintenance. So I could not retrieve the numbers for the year to date. But based on my last check, my combined three accounts were up about $250,000 for year to date 2026, which is roughly about 5 to 6% return and slightly lagging S&P 500 gains. I think it's about 10% for year to date S&P. Now, it's unrealistic to expect to beat market every single month or every single year, correct? There will be bad years, there will be good years, there will be bad times, good times, always. You cannot have winning trade every time or every year. Now, over the past 3 years, I have consistently beat the market. And I'm not going to be sad if I cannot repeat the same record this year. But hey, who knows? The year has not ended yet, and we're just halfway there. So for the remaining 6 months, anything can happen. Anything can happen. Next slide. Okay. Now, in 2025, which is last year, I ended the year with $660,000 in profit, 20.1% return on investment. And obviously, I beat the market. S&P 500 was at 16.4% last year. Move to the year before, which is 2024, I generated over $1 million. So $1.2 million profit, 54.6% return on investment in 2024. And obviously, I beat the market by 2 times during that time. Now, before you think, "Bang, that's amazing, but I don't have millions to trade." Now, let me be clear here. The percentage return is what matters. The 54.6 on, let's say, 50K account, still $27,000 profit in 1 year. Not too bad. Or a $200,000 account, the 54% means $109,000 profit. Right? So you see the point, right? The system scales to any account size. So no matter you trade on small accounts or big accounts, Doesn't matter. Let me show you one more year, the year before 24, that is 23, right? 2023. That year, I also got a good profit, $868,000 and 84% return on investment. So I quadruple the market return, so 4 times of S&P 500 during that time. So that 3 consecutive years of strong, consistent market beating returns. You can see there. Now I'm not sharing these numbers with you just to impress you, right? I'm sharing with the intent to inspire you. And more importantly, to show you what consistent, systematic option trading looks like over time. These results come from a system, a process, a set of rules that I follow consistently. Not gut feelings, not predictions, not hope. It's a system. And today I'm going to walk you through that system step by step. Ready? Let's start with the power of options. Okay, let me break it down a little more specifically here. Because the benefits are very different depending your profile, right? If you are an investor, someone who owns stocks for long-term capital appreciation, option can allow you to do 3 powerful things. First, it can help hedge your portfolio against market crash using protective puts. So if the market drops 30%, your portfolio doesn't get destroyed. Second, option can generate monthly income from stocks that you have already owned by selling cover calls. It's like earning rents from your shareholdings. Third, investor can also buy fundamentally great stocks at a discount using cash secure put. I believe Adam touched on it in this morning webinar, right? He talked about selling cash secure put to potentially acquire great stocks at a discount. Or if you don't get to buy stocks, you get premium for free. So those are the benefits for investors. Now, if you are an option trader, active trader, options allow you to profit in any market directions. Not just when things go up, right? You can make money when the market falls. You can make money when the market goes sideways and does absolutely nothing. And crucially, just give me a second. You can use much less capital when you trade options. And because you use less capital, you could generate much higher return on investment because you generate almost the same profit on a lower capital. That means you make a good return on investment percentage. The strategy that I'm focusing on today, the profit box, is particularly powerful for one reason. You do not need to predict where the market is going. You just need the market to stay within a range. That's it. That's all. Okay, let's move next. Now, what is the profit box strategies I'm talking about? Yeah. Here's a big idea I want you to hold on to for the rest of the day. Now, most traders and investors try to predict where the stock is going to go up or down. And the honest truth is nobody can do that consistently. Not me, not Adam, not Alson, not even the best hedge fund in the world, right? Nobody can do that consistently. The market is inherently unpredictable in the short term. No one can predict where the market goes next day or next week consistently. So instead of trying to predict the market direction, what if you could just build a large profit zone around a stock? Simply say, hey, as long as the stock price stays within this profit zone by expiration, I win. I don't care if it goes up a little, down a little, as long as it stays inside the box, I collect my profit. This is exactly what profit box strategy does. We'll build a wide profit zone around a stock, get paid upfront the moment we place the trade, and then we simply wait. I think of this like being a landlord. When you own a rental property, you collect rent, right, from your tenant every month. You don't care where the market will go. I mean, the property market does day to day. You don't care. You don't need to don't need the property price to go up for you to keep collecting rent, right? You just need your tenant to keep paying rent. That's it. Now, with profit box strategy, I'm a landlord to the stock market. I collect cash premiums, my rent, the moment I place the trade, meaning upfront. And I sit back and I'm paid to wait. And here's what makes this even better. My risk is completely defined before I enter the trade, meaning I know exactly how much I could lose in a trade, not more. And I would know exactly how much I can make in the trade as well. No surprises, no blow ups, no sitting up at 3 a.m. in the morning to check the account, right? Absolutely in control. Next one. Now, let me show you what kind of stock or ETF we look for when we build a profit box. Right? So we look for stocks that are trading sideways, moving within a defined range, or not in a strong uptrend, not in a strong downtrend. Essentially, I'm looking for a setup that is going nowhere fast. I mean, I expect the stock price to continue to consolidate or trading in a range. And let me show you one chart. And you tell me yes or no in the chat if the setup is suitable for profit box strategies. Ready, everyone? Here we go. Now, on this chart, tell me. Okay, hold on. I think I got mixed up. Okay. Yeah, so okay, that's right. That's correct. Okay, so in this setup, you see that the charts looks like it was bouncing off a support and then hitting some resistance, and then look at the moving averages. They are like crossing each other, right? Crisscrossing each other. So Adam also talked about this kind of setup earlier today. And that pattern tells us the stock has no clear directional moment. So is that yes or no for a profit box trade? That's right. Many of you got it correct. So I like this setup. because it's like the stock price going nowhere, right? Keep going up, down within a range, and that is perfect for a profit box trade. How about the next one? Micron technology. MU. Yes or no? Is that a good setup for a profit box strategy? Obviously, it's a no for me. It looks like it is on a very solid uptrend, very solid momentum, and no sign of topping out yet. So I would say no on this setup for a profit box trade. How about the next one? Adobe. Is it a good setup for profit box? Yes or no? It's so clear, right? Just from my bare eyes, I can see that the stock price is on a steady downtrend, no sign of bottoming. And in fact, if you zoom this one back 2 years ago, it had the same pattern, one straight line down. And I have not seen the stabilization yet. So I would skip the trade as well. So I would not use this setup for profit box strategies because it indicates that the supply potentially goes lower. How about this setup? It's a little bit more tricky. C limited. Is that yes or no for a profit box trade? It's a mixed signal, isn't it? In the previous months, you see it's on the declining trend. But over the past few months, recently, you see the stabilization there, the consolidation there, and looks like the stock price is trading in a range. And therefore, I would say it is okay to use this setup for a profit box strategy. Right? So you have an idea on what kinds of setup I'm looking at when I choose a candidate for profit box trade. I will show you more examples during the live trade hunt webinar on Thursday. Right, so we go through my prepared trades, but I will welcome any trade ideas you throw in as well during that time, and I will analyze them. Right, if the setup is good, then I will enter live trade using my real money. Right, no fake money, no simulation, nothing, just real money. So therefore, it forced me to do the due diligence more rigorously. Yeah. So I need to be careful because I will use my hard-earned money to trade. Okay, next slide. We do something fun here, everyone. I want to do a quick poll with you. So in the next slide, after this, I will show you one chart. And your job is quite simple. Look at the chart and tell me in the next 40 to 45 days, do you think the price will likely be higher or lower or flat versus today? Be ready. So you have three options there, right? Higher, lower, or flat. 40, 45 days from now. But look at the chart first. And just type in the chart where you think higher, lower, or flat. Here's a chart. It's a SPY, S&P 500 ETF. Yeah, you see from the low, it went straight up, but then spent the last few weeks consolidating, right? So now people are wondering whether it will be higher or lower from here, with so many things happening in the background, right? You have the continued war in the Middle East. You have the mid-year election coming, right? We have Fed maybe raising rate, right? So there are so many macroeconomic things that are happening and the geopolitical background as well. So just type into the chat whether you think about 45 days from now, SPY will be higher, up, down, or flat. Just either higher, lower, or flat. 30 seconds, everyone. Go. All right. Um, just a quick glance, right? We have a mix of answers. Some of you say higher, some of you say lower, some of you say flat. All right. So it's a fascinating thing, right? Everyone, I believe, in this room is intelligent, and many of you are experienced traders or investors as well. And still, we cannot agree on a simple higher, lower, flat kind of question. And that's not a failure on anyone's part. This is the honest reality of financial markets. No one, not me, not Adam, not Warren Buffett, can consistently predict short-term market directions with accuracy. And yet, most trading strategies ask you to do exactly that. Predict direction, to bet on it. So as you see, if you trade stocks, you need to bet on one of the directions. Either you go long on shares or you go short on shares. Options, yeah, most of the strategy also bet on either way, either directions. Now, the profit box strategy says we don't need to do that. We don't care whether it goes up or down slightly, as long as it stays within our range. We win. Now, the person who say higher, the person who say flat or lower, they will all walk away with the same profit. That's the beauty of profit box. That is why I love this strategy. You stop guessing. You start collecting. Okay, so that is the profit box. And that is another name called ion condor. Right? So before you get like confused with the names, I want you to hear this very clearly. It's a two-step process. That is all. Step one, you sell a bull put spread. And I believe earlier today, Adam also talked about bull put spread. Right? So that is one part. And step two, you sell a bear con spread. Two steps. That is in Thai iron condor. When you put these two steps together, you build your profit box. And let me walk you through each step, one at a time, using real example. Be ready? Okay. Let's start with the put option. Now let me explain what the put option is all about, right? Let's say SPY is currently at 750 Can you show on the details of this share slice? Right. So right now, I say SPY at 750. And for those who think SPY will go lower from here, you could buy this put option. So what do you have in this put option? Let me explain the key parameters of the put option here. So the first one, it has the name of the stock, which is SPY. Right? SPY is the name of the stock. In this case, it's actually a ETF. Right? You see the ETF SPY. And let me also pick the expiry date, which is August 14, 2026. So roughly about more than a month from now. So name of the stock, SPY, expiry date, August 14. The third one I need to pick is the strike price. The price at which the option, if you want to transact with the share, it will be transacted at that strike price. Option type in this case is put option, and the premium you need to pay if you want to buy this option. Now, for those of you who think the price of SPY will go lower from here, you could buy this option. You could buy this put option. Because if you do, you will have the right to sell your shares or SPY shares at the price $725 per share. So if you think the price will plunge, right, will fall a lot, you could buy this put option to benefit from the price dropping. Because let's say if the price drops to $700, you have the right to sell SPY at $725. That means you pocket the profit between $725 minus $700. So $25 per share. Minus the premium you pay, in this case, $7. So roughly you have like $18 per shares times 100, because each option equivalent to 100 shares. So if the SPY drops to $700 by the expiration, you will make about $18 times 100, so $1,800, right? $1,800 profit if you buy a put option. So for those who think the price will go down, you can buy this put option. Now, on the other hand, for those who think SPY will go higher or flat from here, you actually can sell this put option. You will be the counterparty of the buyer. You be the seller. Now, if you sell this put option, you will be obligated to buy 100 shares of SPY if the share price drops below 725. So from 750 right now, the stock price drops 25 points or below that, you are obligated to buy 100 shares, right? But if the share price doesn't drop below that, meaning stays above 725 by the expiration time, guess what? You will earn this premium, $727 premium from the option. So you see the two sides of the transaction here. The buyer of this put option, the bearish people, right, will benefit if the stock price falls a lot. But if it doesn't fall a lot, just fall a little or stays flat or goes even higher, then the put option buyer will lose the money. On the other hand, if the seller of this put option think that the stock price won't drop that much, he or she can sell this option, collecting the premium upfront. In this case, $727 premium upfront. And if the stock price doesn't fall below the 725, which is a strike price, by the expiration, he or she will keep this premium for free and keep doing that process again, right? So, as you can see there, for the buyer to be making money, the stock price needs to move into the right direction. I mean, it needs to drop. And it needs to drop enough before the time is running out. So for the put buyer there, the odds of winning is low because three things need to happen: the price direction, the magnitude of the price move, and the time. Time has to be the thing has to happen very fast. If one of the three things doesn't happen, then the buyer of the option there will lose money. On the other hand, the seller of the option will benefit or will make money if the stock price either doesn't drop below the strike price, 725, or goes sideways or goes higher. So that's the scenario, three scenarios that the option seller can make money. Or the whole thing will only collapse after the option has expired. Yeah. So obviously, because of that, the option seller has a higher winning probability. Yeah. So that's the concept of option, and should you be a buyer or should you be a seller? Now let's move to the next one. I will show you what it means when you look into the platform. Maybe you give me 30 seconds. Let me do something here. Can you see my screen? All right. What I'm sharing with you here is a screenshot of Thinkorswim trading platform. And let me explain how to read this chart because it's quite a lot of data here, right? So the way I construct a bull put spread. So remember, the profit box has two steps, right? Step one, you enter with a bull put spread. So let me start with step one. And I have explained to you put options. If you are the buyer, what does it mean? If you are a seller, what does it mean? Yeah. So here, how to construct a bull put spread, right? The first rule that I have here is you select a date to expiration. We call it DTE, date to expiration. Anywhere between 30 days to 45 days will do. And if you trade it on stocks, make sure within that 30 to 45 days, there will be no earnings event, right? Now, I'm trading this one on SPY, which is an ETF, which has no earnings event. So it's a good thing. So always good to trade this one on ETF because there are no earnings event. Because earning is a binary event. The stock price can gap up a lot or can gap down a lot, which is not ideal for a profit box strategy or an iron condor strategy. For iron condor, we want to make sure the stock price stays steady in a certain range, not gapping up, not gapping down. Okay, that's why we want to avoid earnings. So 30, 45 days, no earnings. Let's say the stock price right now, at the time I put a screenshot here, SPY is trading at 440 44.78. Right? So that is the SPY price. Now, within that, I can be both seller and buyer. Let me be a seller first, because I explained to you earlier, right? The seller of options has a higher probability of winning. So then I will make sure that I will have even better chance of winning. How do I ensure that? Well, first of all, I will select a put option to sell that is below the current stock price. Right? The current stock price is, let's say, 745. I will sell a put option at 725, which is about 20 points below the current stock price. That means that is my margin for error. So in case SPY price dropped less than $20, I'm still okay. I'm not obligated to buy share or something, right? So I want to collect the premium for free. So I want to make sure that the stock price doesn't drop to my strike. So I choose a strike price where I have the delta somewhere between 23 to 28 delta. So in this case, 28 delta. What does it mean, 28 delta? In a simple term, it means I have only 28% probability that the price falling below $725 by this date, August 14. Only 28% chance that the stock price will fall below 725. So that means I have more than 70% chance collecting this premium for free. And I will collect $727 because it times 100 shares, right? So I will collect this premium. $727 for one contract will be for me to earn in the next, in this case, 42 days, right? 42 days, yeah. If the price doesn't drop below 725. Yeah, so I have a very good chance, more than 70% chance that I will collect this premium for free. So for those who have been selling cash secure put, and Adam talked about it this morning, you know exactly how to do this. You sell a put option below the stock price, highly likely that you will collect that premium for free. Occasionally, the price can fall below that strike price. Guess what? You are obligated to buy shares at that lower price. You would be happy anyway, because now you can acquire shares at a lower price than the current market price. So Adam has used a lot of this technique, cash secure put, to buy shares on fundamentally good stocks that have been trading below intrinsic value. And he played hard to get. He played hard to get by selling cash secure put at even lower strike price than the market price, which is already undervalued, so that he could potentially buy shares at a steep discount, very deep discount. That's what he did. I did it also occasionally because I mostly do options. I don't want to hold shares. Now, this is a good thing if you do it on stock, especially fundamentally good stocks that is undervalued. But there's one disadvantage of just selling put option here. It will block you a lot of capital. And you get to make sure that you have enough cash to potentially own shares. So let's say if SPY drops below 725 by August 14, you need to have cash to buy 100 shares. And 100 shares times 725. How much is it? $72,000. $72,500. You need to have that much of cash to buy 100 shares of SPY. So for those who have small accounts, you cannot do it. Obviously, Adam explained also, right? For small account trader, you likely cannot do cash secure put. But there's another technique for you to trade similar thing like this using much less capital. So instead of selling cash secure put only, like selling 725 put here, you can do another thing, which is to buy a lower put. So in this case, I can buy 720 put, which is lower strike price. But that means I will need to pay some premium for it. So I collect 727 here, but I will need to use 632 to buy this put option. So buying this put option essentially means you buy a reinsurance. You know that insurance companies do not just sell you premium or insurance. They do buy reinsurance. They do buy reinsurance. So this is the concept of selling insurance and buying reinsurance at the same time to cap the loss in case there's a black swan event happens, in case some catastrophic event happens. You don't lose your share. You don't blow up your account. So of course, if you do this, your net premium from the two legs here will be lower. You no longer can collect $727, but now you need to pay back $632, and therefore the net premium you collect from the two is only 95 cents, right? Which is about $95 before fees, before commission. But the benefit of doing that is this. Now the broker doesn't need you to have cash ready, $72,000 cash. You don't need that because by buying reinsurance at the lower put strike here, you will cap your downside risk significantly. And your risk, your max risk is now defined or capped. It reduced significantly. If you only sell the put, your max loss in theory is $72,500. But if you buy 720 put at the lower strike price there, your max loss is now very little. How much is the max loss? Well, it's the difference between the long put and the short put. Right? The short put is 725, the long put is 720. So your max loss is $5. And $5 is not your max loss actually, because you collect 95 cents upfront. If you lose everything, you lose $5, but you collect 95 cents. So therefore, your max loss is $4.05 only, $4.05 times 100, so $405. And because of that cap risk or defined risk, the broker will block you much less capital. They don't block you a hefty capital anymore, because now your max loss is only 405. So they block you the max loss, which is 405. So you see the benefit. And Adam talked about it earlier today that for small account traders, you may look into bull put spread instead of selling cash secure put, because you don't need a hefty or big account to trade. Now a few $100 can do. Yeah. So that is the benefit of bull put spread. You sell a put at the lower strike than the current market price, and to cap the risk, you buy a even lower put. Now you say, okay, I got only 95 cents, not much, $95 for 42 days. Let's talk about the return on investment data. Okay. But now you look at the P&L curve or the chart, see where's your profit zone for the bull put spread. Well, anything on the right side on the green arrow here, that is profit, right? Profit. So you see the blue curve is a P&L of the trade by the expiration time, which is 42 days from the day I enter this trade. And the pink curve, you see the pink curve here, that is a P&L on the day I enter the trade, right? So eventually the pink curve will move towards the blue curve. So at the expiration, the pink curve will move to the blue curve, right? If you are here, it will move down to the blue curve. If you are here, it will move down to the blue curve. I don't know why is lagging, right? So just keep so just pay attention to the blue curve, right? Which is P&L at the expiration. So you see current stock price is roughly 745. You will have a break-even point at around 724, which is the strike price minus 95 cents, right? So a dollar, right? So 724, that's your break-even point. So by the expiration time, if the stock price doesn't drop below 724, your trade will be profitable. But the max profit will be achieved if it stays above 725. Yeah, so you make less profit if it stays within 724 and 725. Now, you don't make money day one. You need the time to pass so that the pink curve moves to the blue curve. That's where the money will be made. Yeah. Now, how many percent probability I have for winning? So by the simulation here, you have more than 70% chance. There are more than 70% chance that you'll be winning in this trade. But there is about 29 or 30% chance that your trade could be losing as well. Now, if you lose, your max loss will be here, which is 405, 405. That's your max loss. Now, by now, some of you may have already asked, hey, Bang, you are risking 400 for $100 profit. So your risk is 4 times of the max gain, correct? I think that's a fair question. There are 2 things I want to address here. Number 1, remember, you have much higher probability of winning. So yes, I have less profit in the trade, but I have much higher probability of winning. So this is something like insurance business. Insurance company knows in advance that if they sell insurance to a car driver, if the car gets an accident, the company will have to make a compensation many times bigger than the premium they get from the insurance contract. Correct? So the same concept, right? Or insurance sell home like fire insurance. If the home gets burned down to the ground, the insurance company will need to pay a big compensation and many times bigger than the premium they collect from premium. Same concept here. If you are unlucky and your trade is losing, your loss could be many times bigger than the gain. Same concept. But why insurance company continue to do their business? Because they know the odds is in their side, the probability in their side. They have much better probability of collecting the premium for free than paying the compensation occasionally. So that's number 1. Number 2, I will ask you to hold that thought for now. At the end of the session, you will know that I will never lose $400, 405 here. I will never let it run like this. Never, right? Now, if you only do bull put spread, you know one of the rule to cut loss is when the stock price drops and hit the short put strike, right? So at that point, I cut loss here, I will be losing less than $100. So then the loss and the gain is kind of one-to-one. So if you follow the trading rule on the bull put spread, which is also part of the curriculum, you know that we never let the trade run to the max loss. We will cut loss early when it hit the short put strike. And then at that point in time, the loss is minimum. Now, but just hold it now. Let me complete the whole iron condor, the profit box, and then I tell you the risk will be much less than this also. Okay, let me continue. Now let's talk about the profit. So some of you say, okay, 95 is too small, right? How about looking at the return on investment? So 95 over the max loss, which is also the capital, that translates into 23.5% return on investment potential, right? Now, this 23.5% is per trade. In this one, 42 days, not 23% per year. So if you consistently do this one over and over again, many trades and over many months, you can have a very high annualized return. That's why I show you my trading result earlier, right? Some year I got like even 84%. Some year I got like 56 or 54%. Yeah, so that's the reason why you can use option to amplify your percentage return on investment. Yeah. Now, let me also be clear on what are the advantages and disadvantages if you trade bull put spread. Okay, let's start. So first of all, let me reiterate that bull put spread is a concept of selling insurance to earn premiums. And at the same time, you buy reinsurance to cap the max risk. Right? So then it gives you a peace of mind. You can sleep very well. You don't have to worry that you could potentially blow up your account. Right? So because you already have reinsurance. Right? So that is the key thing in this benefit. Now, other benefits includes, first of all, the risk is predefined. I know exactly how much is my max loss, right? And it's capped. So in this case, 405. I use much less capital comparing trading stocks, right? So trading stocks, if you buy 100 shares, you need $72,500. Or you need $750. Sorry, $75,000. Now I use only 405, a fraction of the capital. And that translates into a very high return on investment. 24% in like 1.5 months. Yeah. So it's not like 24% a year. This is a trade. Number two, in this trade, you have time decay works in your favor. So then you can make money even when you are sleeping. Yeah. Or even when you are watching Netflix. Or even when you are watching World Cup, right? And by the way, go Argentina. Yeah, love it. Don't tell me the England what is it versus Swiss? Oh, sorry. That's yeah. So the latest match I haven't watched, so I will watch it later. Don't tell me the result yet. The Switzerland versus is that England? Yeah, maybe I'm wrong. Sorry, I mix up. Get mixed up. Yeah, so that one you can watch and the trade still generate income for you. So it's like when you swim in a river, right? You swim along the river together with the current. Current push you ahead, so you can swim very fast. Yeah, so you have time in your side. Time is your friend. You have high probability of winning in this trade because time works in your favor. It's the concept of selling insurance. An insurance company knows they have high probability of winning. Of course, occasionally they get hit and they have to pay compensation for it, but that is a lower probability. Now, what are the disadvantages of this boom push spread? Of course, the profit is capped, right? If it goes up a lot, you make certain money. That's it. The premium you collect, $95 in this case. And you cannot make more than that. Same for insurance company. They collect $1,000 from you or like $5,000 a year for house insurance, for example, and they don't make more than that, right? Risk reward profile, as you can see there, is unfavorable because you could potentially lose a lot more than the max gain. But as I said, I will never let my trade run to the max loss. I will cut loss early and limit my loss at a much smaller number. All right, so let me pause here to see anything. Argentina versus Switzerland. Okay, sorry, that's my mix up. Oh, then I don't know yet the result. So, okay, I don't look at the screen right now, so you don't spoil my game later on. Argentina versus Switzerland. Good. Okay, let's now move on to call options. So I finished the put option. Hopefully I summarize what Adam talked this morning as well. I give you the concept of put. I put you in the shoes of both seller and buyers. And bull push spread, you will play both roles. Right? You are both seller and buyer at the same time. But net, you collect premium. So I could say you are the net seller. Now let's move on to the call option. What are the call options? Now let me flip the other side. Instead of thinking the price will go lower, let's think about the other way around. So call option, let's start with similar information. So I pick one call option where I will trade the SPY. Also choose the same expiry date. So in this case, I select a higher strike price, 770. The stock price is 745.50 right now, right? So the stock price needs to go about $20 to hit my 770. And that call option, and the premium is 435. Now, for those of you who think the SPY will go higher from here, you could buy a call option, right? If you are the buyer of the call option here, this call option, you have to pay. You will have to pay $4.35, which is $435 for one contract. And if you buy that one contract, it allows you to buy shares at 770, even if the share price goes to, let's say, $800 by the expiration, which is this day. So got it? So you buy a call option expecting the stock price to go higher, and you can buy a call option here. And even if the stock price goes past the strike price a lot, you can buy your share at 770. All you need to do is to pay this premium. right? So for those of you who think SPY will be higher, yeah, you can buy a call option. But keep in mind that you have lower chance of winning, because if the stock price stays right now in the next 42 days, you'll be losing money, right? If the stock price stay at 750, why you want to buy shares at 770? No points, right? So then you'll be losing the entire premium. Now, even if the stock price goes up, let's say it goes to 765 by the expiration, guess what? You will not exercise your option, because you don't want to buy share at 770 where the market price is 765, right? You'll be losing money if you do that. So in that case, you will be losing this premium as well. The only scenario where you make money is when the stock price go beyond 770 plus this premium, so 774.35. That's where you make money. Anything below that, you'll be losing money. So obviously, a lot of things needs to happen at the same time for you to make money if you buy a call option. That's why you heard from Adam. He never buy call option, single options, and neither do I. I don't buy call option, single one. Right? I buy with the intent to do something else. It's fine, but not just buy a call option. But I tell you what, most of rookie option traders, new options, right? The young people, they just buy call options. They just buy call option because there's some low risk kind of perception. So what do they say? Okay, if they are bullish on a stock, right? They say, okay, what the heck? The worst case scenario, I will be losing only $435, but I have unlimited upside potential. That's why they keep pumping money into call option on meme stocks, or highly speculative stocks like SpaceX, like memory storage stocks, right? They buy a lot of call options. Right? Sometimes they got it right, right? So for example, if they buy call on memory stock and memory stock goes up a lot, they make money, correct? But I tell you, most of the time they will be losing money. Okay? Or they buy call before earnings, expecting the stock price to move up sharply on earnings. And more often than not, you will see that they lost money. Now, I don't blame them. I used to be them. I used to be like them. In the first 7 years of trading, I was like them. Right? I bought call before earnings. I bought call on meme stock. There's no meme of that, but like high momentum stock. And sometimes I make money, sometimes I lost money. In both cases, I did not understand why. So I remember many times when I bought call before earnings and stock price went up after earnings, yet I see my call option lost value. And I did not understand. Right? So then later on in the career, I understand there's something else called volatility crush on earnings, and you need to learn that in the course as well to really understand how volatility works, and the Greeks as well. So a lot of things like that I learned later after the first 7 years of going around in circle and lost money. Okay. So for those of you who still want to speculate on price going higher, you buy call option. On the other hand, for those who don't think the stock price will go that much higher, you can choose to be a seller. You can choose to be a seller. If you sell one contract of this option, you will be obligated to sell shares at 770 strike price by expiration. right? If the share price goes beyond that. So if it goes to 800, then you need to buy shares at the at the market at 800 and sell it to this buyer at 770 and then lost money. Yeah. So if you are the seller of the call option, you will be you will have that kinds of risks. Yeah. So you can be either way. For those who think stock price will not go beyond 770, yeah, you can just sell it because stock price goes up a little, you make money. Goes sideways, you make money. Stock price goes down, you make money, right? So there are many pricing scenarios where you could make money from selling call option here. And therefore, inherently, you have higher probability of winning if you are the seller of this call option. Now, my advice is don't sell naked. Sell naked means you have no shares and you hold no shares. You just sell call. That is a suicidal action that I think of. So it's like you are committing a very uh, fatal kind of mistake. Suddenly, if the stock price goes to the roof, then you could lose unlimited loss. Yeah, just be careful. So, but hopefully it gives you an idea of what call options is all about. If you are the buyer, what does it mean? If you are a seller, what does it mean? Yeah. Now let me also go to the broker Thinkorswim here and also pull up the option chain and explain to you how to play around with bear call spread, which is a step two. Remember, the profit box have two steps. Step one, enter with a bull call. Step two, enter with a bear call. Yeah. Now this is opposite from the bull call, right? But the concept is similar. Choose the same DTE, date to expiration, between 30 to 45 days with no earnings in the period. And because I'm trading it on SPY, no earnings. Now, the stock price by this time, it was at 744.78. And I select to sell 770. So I'm the seller. Let's start with the seller. So I pick the strike price 770 here, which have the delta of 25. You see the delta 25. What does it mean? 25 delta. It means that there's only 25% chance the stock price will go beyond 770. Only 25% chance. So that means I have more than 70% chance of collecting this premium for free. So if I sell this 770 strike, I collect $4.35, which is $435 for one contract, right? And I have more than 70% chance of collecting this one for free. But if you do that in the broker will block you a lot of capital for this trade because it's naked, because you have no protection. Because if the stock price goes to the roof, you will lose unlimited amount of money and could potentially blow up your account. Therefore, they block you a hefty amount of capital. Don't do that. It's a suicidal action, as I said. Therefore, the second step for this one would be buying an insurance. So not just selling insurance, buying reinsurance. Buy a protection for you. So in this case, I will buy, not put, this is a mistake that I have. This is a call. So I will buy a protection, which is a higher strike call. So if I sell 770 call, I will need to buy, let's say $5 or $10 above to protect my upside risks, to cap my upside risk. And this is a mistake on so it's not 632. This is $3.12. Yeah, see, I make mistakes here. Okay, let me repeat. If I sell the call option here alone without buying a protection, that is a naked call, and the broker will block me a hefty amount of capital because the risk is unlimited. And as I said, never do that because it's a suicidal action. The better way is to protect with a higher call strike, $5 or $10 above what you sell here. And you need to pay for that reinsurance. So the concept of selling insurance and buying reinsurance to protect or to cap the max risk at the same time. And if you do that, the broker will block you very little capital or max risk. Because the max risk is now reduced. You will not lose the unlimited amount of money anymore. Your risk is now capped at the difference between the two strike price. 770 versus 775. So that is $5. Right? If you do that, you collect a net premium. So 435 minus 312. So you get a net credit cash upfront, $1.23. And that's your max profit. And as I said, your max risk is $5. The difference between 775 versus 770 minus the premium you collect here. So that becomes $3.77 times 100. So your max loss is capped at 377. And for that, the broker will block you only 377. You see here, that is a max loss. And you can sleep very well. Even if the market goes through the roof, you don't lose more than 377. Yeah, so good. You don't need to use tens of thousands of dollars capital anymore. Now it's only 377. Let me summarize again the rule here. Yeah. DT 30, 45 days, no earnings. Sell a call at about 25 delta. The range can be 23 to 28 delta. In that range is fine. And you buy a protection at $5 or sometimes $10 above your short strike here to cap the risk. Now let's move on to the risk reward profile for a bear con spread. So you can see the bear con spread chart looks reversed from the bull put, right? The blue curve is the P&L curve at the expiration. The pink curve is the P&L curve today. And you can see that the trade has a break-even point somewhere 771. So basically 770, which is your short call, plus $1.23 you collect from the both legs combined. So that's 771.23. So that is a break-even point. Now, if the stock price goes up, but not beyond 7723, your trade will be profitable. If it goes beyond your break-even point, your trade will be losing money. So the stock price right here, it needs to move up a lot for you to lose money. And therefore, you have more than 70% chance of winning here, 71% chance of winning. There's 29% chance that the stock price can go beyond your break-even point, and then you will be losing money. So if that is the case, you'll be losing $377 here. And some of you may also ask, why you want to lose 3x of your max gain, right? 377 versus 123, right? Again, same concept of selling insurance. Yes, compensation for accident or compensation could be significant, but the probability of paying that compensation is low. Most of the time, insurance company collect premium for free. Of course, they have their operational expenses as well, but they collect premium and they don't have to pay. So when you buy insurance for your car, buy insurance for your house, buy insurance for your health. Of course, you don't want your car get accident. You don't want your car, or you don't want your health deteriorated, right? You don't want like you don't want to be hospitalized. You don't want your house to be burned down to the ground. So most of the time, nothing happened, business as usual, and therefore insurance company collect the premium for free. Yeah, so that is the same concept. That's number one. Number two, as I mentioned earlier, I will cut loss early as well. So if you learn back-on spread in the curriculum, you know our cut loss rule. When the stop price hit the short call strike here, I will cut loss. So 77 here. If I have to cut loss today, well, I will be losing $150. Almost the same with the max gain, right? Max gain, max loss, almost the same. Right? So I will never let the trade runs to the max loss. That's the point. I will cut loss before that. But hold this idea or hold this thought until the end when I show you the whole picture of the profit box. Now let's talk about the profit and the return on investment potential. Yeah, when you say, okay, $123 that I collect here may look small, right? But if you compare that versus the capital you use in a trade, it's not small, right? 123 profit over the capital of 377. What do you have? 32.6%. And not per year, this is per trade. Less than 1.5 months. So if you keep doing this month in, month out throughout the year, you can see that you can magnify your return on investment for your account significantly. It's a good way for you to build up your wealth, especially grow your small account into big account. Got it, everyone? Now, what are the disadvantages or advantages of bear call? Okay, same concept, selling insurance and buying reinsurance to cap the max risk. Same concept with the bull put. And the advantages include, number one, you know exactly how much is your max loss in the trade. So in this case, the bear call has the max loss of 377. That's it. You cannot lose more than that. Even if the stock price go to the roof, you can sleep very well without, fearing that you could potentially blow up your account, because you know exactly how much is your max loss in the worst case scenario. Right? So max loss is capped. Number two, you'll be using much less capital, and that magnify your return on investment. Right? Number three, same with bull put, time decay works in your favor because you collect premium upfront. Yeah, you are both seller and buyer of put of call options, but net you are the seller because you collect premium upfront, right? So like insurance company, they sell insurance and they buy reinsurance. They are both buyer and seller, but net they are the seller. Time decay works in their favor. Every day you wake up healthily, your house has nothing, your car is still safe, then the insurance company will earn something. Right? So that's the same concept. If your trade doesn't move widely against your trade, then you will earn some money every single day. Time works in your favor. And because of that, the trade has a high probability of winning. So in this case, you have more than 70% of winning. What are the key disadvantages? Of course, similar to the bull call, the disadvantage of bear call is the profit is capped. You cannot make more than the premium you collect. So the concept of selling insurance again, you get the premium upfront, and that is the max gain. Occasionally, you have to pay a compensation, meaning you cut loss. Well, your potential loss is more than the gain, right? But if you do it early, then you will keep your loss at minimum level. Okay, before I take Iron Condor profit box strategy together, can I have just 1 minute break? Because I need to get some water here. Okay, just bear with me. 1 minute break. Hello. Please can you move me to the front, please? All right, welcome back, everyone. So before the break, right, I explained 2 steps. Step 1, you enter with a bull put spread, and step 2, you enter with a bear con spread. Both are using the same concept of selling insurance and buying reinsurance to cap the risks. You collect net premium, time decay works in your favor, right? You are paid to wait. Now, what happened if I'm going to put both together at the same time? Right? So now if I execute a trade where I enter both bull put spread and bear con spread on together at one order. Okay, just remind you, this is the profit box strategies I'm talking here, the Iron Condor trade. The technical setup, as I explained at the beginning, for the candidate, it needs to be trading on a sideways. It is in a certain range, and your bias is going to be the same, meaning the price will continue to trade sideways or in a range. Within that stop, you pick a DTE, date to expiration, between 30 days to 45 days, and check no earnings event within that time frame. So if you trade ETF, then it's very sure that no earnings. But if you trade the strategy on stocks, make sure there's no earnings in between. After that, you enter a bull put spread and a bear con spread together, same DTE. All right. Bull put, just remind you, sell a put at around 25 delta with the range between 23 to 28 delta. That's fine. But on average, it's roughly about 25 delta. And to cap the downside risk, you buy a lower put to protect, like $5 or $10 below. Similarly, on the call side, you sell a call at 25 delta. That means you have a high probability getting the premium for free. But you need to cap the upside risk by buying a higher call, $5 to $10 above, right? So if you choose $5 for the put protection, you also need to choose $5 for the call protection. If you choose 10 for the put protection, it needs to be 10 here as well. So it needs to be balanced. And the net of the two, bull put and bear con combined, you need to make sure that you will collect at least $1.8 net premium, ideally $2 or more. Right? So ideally, if you can collect $2 of the combined two sides, that would be ideal. Max risk in the trade will be a spread versus the collected premium. So I explain that later. Now, let me bring you back to the platform where we simulate the trade with both step 1, step 2. Again, select the stop SPY here, DTE, 42 days. Stop price right now at 744.78. I enter a bull put spread where I sell 730 and I buy a lower put to protect. Right? So I collect a net premium. Hold on. 95 cents, correct. So I collect the net premium of 95 cents. So that's the bull put spread. At the same time, I will also enter a bear con spread where I sell a call at 25 delta and I buy a higher call to protect, right? The difference is the same, $5 here, right? And then for this bear con spread, I will collect $1.23. Now, if I execute this trade with two steps here, which is 4 legs together, right? Buy, sell, collecting premiums from both, how much would be the net credit or the premium I collect from the trade? Tell me what is the total. Okay. Maybe something wrong with my chart. 727. Okay. Sorry, this is wrong. Okay, let me correct. This is 730. Let me say. I think I got it wrong here. The bull put spread earlier was 725, 720. Okay, let me correct that. 725, 720. This one should be here. I got it wrong. Sorry, somebody spot my mistakes. It should be here. Yeah, so that's 725, sell 725 and buy 720. That's correct. Okay, so now it's correct, everyone. Okay, somebody already asked what is the advantage of buying of the iron condor. Okay, let me repeat this one because I got it wrong earlier. So first step, I will sell a bull put spread, sell 725, buy 720. And I collect a net credit of 95 cents. Okay, I just put the box incorrectly earlier. Now I move it to the correct position. The second step is to sell a bear con spread, 770 and buy 775. And I collect $123 credit. Now, if I execute this trade with 4 legs together, buy sell here. How much is my total premium that I collect? How much is it? Somebody say 218, 218, 218. VJ say 28, but most of you say 215. Trajan also, no, VJ said 28. Okay, so most of you say 215. So 218, sorry. Most of you say 218, which is correct, which I show here also. You can see if I execute the order with 4 legs here, I would collect 218. So with one contract, my max gain, which is the premium I collect up front here, will be $218. Here's my next question to you. If I do this, how much is the max risk of the trade? Remember, I told you the put spread has the max risk of $4 and 5 cents, right? And the bear call has the max risk of $3.77. Remember that? Now, if I execute both legs, both on legs together, what would be the max risk of this trade with 4 legs on together? Tell me the number. What is the max risk? I have very different numbers here. Some of you say 782. Some of you say 405. Some of you say 82. Some of you say 172. 405, 405, 405, 282, 282, 282, 381, 282, 187, 5, 405, 775, 782, 782, 405. Okay, all over the place. Okay, all over the place. Apparently, you cannot agree on what is the right number. Okay, I tell you what. Very simple. The max risk of the trade is what? First of all, the max risk is capped by the difference between the short call, the short option and the long option, right? So $5 here and $5 here, right? So in a normal thinking, you would say, okay, I have $5 risk here, and I have $5 risk here. So the total risk will be 10 minus $2.18, right? So that is the normal thinking. This is my risk. So my risk will be 782. And I think many of you say 782, right? 782 is the max risk. But I tell you another angles you need to think about. Now, at the expiration, in what scenario you would be losing $5 here? Well, when the stock price drops below 720, right? Below the long put strike, you'll be losing $5 here, minus the premium you receive. And in what scenario you will be losing max also if the price goes up? Well, if the share price goes beyond 775, you'll be losing $5 here also at the expiration. So in one of the two scenarios, you'll be losing the max. But the question is, can you lose the max twice? You cannot. You either get hit here or you get hit here. You cannot get hit twice. It's like you only die once. You cannot die twice. Either you die here or you die here. That's it. Just choose the battle to die. You cannot die in both battles. Simple as that. So at the end of the day, at the expiration time, your stock price can be either well below here or well above here where you die, or somewhere in the middle where you live, right? You cannot die twice. So in the case where you die here or you die here, your max risk is $5 minus the premium you receive to 18. So what do you have? $2.78. 82, sorry, 82. You cannot lose more than this number. You see the beauty of Iron Condor, right? What do you have? Double the premiums on a reduced risk, right? You will not lose 405 in the bear call. You will not lose 377 on the boom call or bear call. You lose much less because you can only die one way or the other. And you collect double premium. So therefore, your max risk is much lower. So this is already answering one of the questions people ask. What is the benefit of Iron Condor? You get double premium. You have a lower max risk. And in fact, if you execute this order here, you will see that the broker will block you only 282 because that is the max loss of the trade. It is interesting, isn't it? If you execute both sides together, your max gain increases, your max loss decreases, and your potential return on investment, if you make a profit, will be magnified significantly. Any questions here? Okay, Vijay say very interesting. It is. It is like mind-blowing when I got to know about this one many years ago. Okay, somebody already start asking, how do you close this trade? All right, so I will get into the exit rules. So I have rules for entry and exit as well. Yeah. Okay, what is the stop? Okay, so what if the stop price stay between this and that? I have all of this. Okay. So a lot of people get excited and want to get to know more about this. So Paul also say, very interesting. Yes, it is. So lots of people ask, what if the stock price stay between this and that, right? I will show you. Yes, it is amazing. And somebody say, why don't we do this Iron Condor on 0 DTE? Okay, 0 DTE, if you join the community and you join my webinar, I explained many times. I tested 0 DTE for 1.5 months. Adam tested himself. I have my friend tested it as well. I tell you, it is not a good one. Okay, at least for us. Okay, so but if you join the community, occasionally I explain to you a lot of things like 0 DTE in it. Okay, so a lot of people now curious to know what if the price falls between the two. Okay, the two long con and short con strikes, and I get into it because I have the exit rule as well. So wait for that. Yeah. So a lot of people keep asking, what if it falls in between? Yeah. What is the cut loss? Okay, come. Cut loss will be part of the exit rule. Okay. Many questions about what if the price scenario. Okay. When do you BTC for profit, BTC buy to close for, okay, exit rule. Yeah, correct. That part of the exit rule. Okay, so looks like people ask a lot of questions about what if scenario. If the price stays here, what do I do? Okay, I have it. Promise. I have it in the next few slides. Okay, just be patient, but I let you spend some time to think about this one, right? If you do one thing, yeah, it's good. If you do another thing, it's a great one. But if you both combine, it's amazing one. And I tell you, when I got to know this option strategy many years ago, I also had the same feeling. Mind blown. Okay, let's move on. Now, if I put bull put spread, bear con spread all together, the chart will look like this. Right? On the left hand side, this is a bull put spread. On the right hand side, this is a bear con spread. If you put them together, you will see the shape of the P&L curve. The shape of P&L curve. And then the reason why they call it iron condor, because it looks like a condor, which is a bird, right? Bird flying with two wings, So bird flying with two wings, that's why they call iron condor. That's the name of the strategy. Now here's a P&L curve for an iron condor using Thinkorswim platform. Now in the middle, you see a big giant profit box there. That is profit zone. Now, if I remove this one, if I remove this green box here, you will see this almost like rectangle on top of the zero line, which is the profit line. So anything above zero would be the profit line, right? So the trade okay, so the trade has Y profit zone, but two loss zone, left hand, right hand, right? The max loss here, loss zone, the red arrow, the green one is a profit zone. Yeah. So let me put back this profit zone here. So the trade has loss zone here and a loss zone here as well. If I let it run to the max loss, the trade will die here. I let the trade run to the max loss here, the trade will die here. But either way, it cannot die twice. But if it stays within the profit zone, stay in the profit zone here with the two break-even points, the trade should make money. Yeah. So if it stay well between the two short call and short put, short call is 770, short put is 725. If it stay within the two short put and short call, the trade will make the max profit. Right? So that is the shape of the iron condor trade. And the profit is 218, which is the combined premium I collect from both sides. But if you divide it over a smaller capital, now only 281, which is the max risk, reduced max risk, that translates into 77%. Not 1 year. Say it again, 77% on return on investment in one trade, 42 days here. Right? So just to show you one way to make money in options, there are so many ways. So this is one way. Yeah, you reduce your risk and you could potentially earn more. And that translates into a very good return on investment. So it boosts your return significantly. All right. Before I get into the exit rules, which will cover a lot of questions you have, let me summarize the advantages and disadvantages of the strategy. Advantages is the first one, you don't have to guess the stock price direction. As long as it stays within a range, you make money. Your risk is predefined, and therefore your max loss is also capped. Broker also block very little capital because the risk is much lower. You get double premiums for lower risks. That's the best from Einkorn. Double premium, lower risk, that translates into a very good return on investment. Time decay works now aggressively in your favor. So you have two friends working for you at the same time. So you are paid to wait, right? And the trade, though it has two loss zones, the probability zone, the profit zone is still quite decent. You have wide profit zone or wide profit box. Disadvantage includes the profit is capped. Yeah, you get double premium, but it's still capped. Now you have two loss zones. Yeah, the price moves too much to the upside, you lose. Price drops too much, you lose. But again, I will not let it run to the max loss. I will show you the exit rule, and you see the max loss is at my stop loss is much lower. Right now, at this moment, if I leave it to the max loss and the max gain is almost like 1-to-1. Almost like 1-to-1. But if I cut loss early, you will see that the loss will be much more minimum. Yeah, much less. So what are the key exit rules? So people ask a lot of questions here. So let me show you. You see SL, which is a stop loss. That's where I will stop loss. I think this one I do it wrongly. Okay, anyway, later on I will need to correct it. But let me explain to you one of the exit rule first. Number one, best scenario. The price stays within the profit box, the profit zone here. Time decay works in a trade favor. Remember that? So today, the pink curve stays like that. If you enter, you kind of break even at the current price. But as time passing, you see the pink curve will rise. Pink curve will rise. Pink curve will rise. Because at the expiration, the pink curve will merge with the blue curve. It will move towards the blue curves. Right? So then time decay works like this. Time will bring profit to the trade. Gradually, every day you see a little profit coming into your trade. At the expiration, if the price stays within the profit zone, your trade will be profitable. But you need to wait for 42 days in this case, right? Now, one of my rules is I will close the trade early if I can get like 70% or 90% of the max profit already. So in this case, the max profit is $218, right? So if I can get something like 180, 170, 180, 190, 200, I close the trade. I close the trade early so that I can release my capital early. I can recycle the capital on new trades to get a better return on investment. There's no point to wait for another 2 weeks, let's say, or 1 week or 2 weeks, just to get the remaining 10% or 15%, right? If you get the majority of the max profit in halftime, for example, or a little more than halftime, it makes sense to close the trade, to take money and recycle the capital. And you will also eliminate the risk because you never know. You stay in the trade for the remaining 10, 15, 20% of profit, and then suddenly the price moves sharply one way or the other. And then your trade will become a losing trade. Yeah. So don't be too greedy. If you can get like 70% to 90% of max profit, it's good to take the money off the table. Now, occasionally you will see that after you enter the trade, the trade suddenly makes so good money, so quick, so fast. Yeah, sometimes I have got that kind of situation. I enter the trade and within few days or a week, my trade could already generate like 50% of the max profit, or less than half time. I get more than 50% of the max profit. So in that scenario, I would still take the money and run, right? Because if you get so quick money, it's best to just close the trade, eliminate the risk, and release the capital, recycle it on new trades. Yeah, it happens, especially after you enter the trade and implied volatility drops, your profit can come very fast. Now, when do I cut loss? Now, when the stock price moves sharply one way or the other, that will not be ideal for the trade. And if the price hits one of the break-even points, I will exit. So in this case, actually, I drew it incorrectly here. The stop loss needs to be here because that is a break-even point. The stop loss is here. That is a break-even point. So I need to correct it here. The stop loss will be here on the upside, and the stop loss will be here. The pink curve will be here when it hits the break-even point. And you will see that in this particular trade, if the price drops too much and hit my stop loss to the lower side break-even point, I will exit the trade at a very minimum loss, maybe $20, $30. That's it. So if I cut loss early, right, the loss is very minimum. But if it moves sharply to the upside and I have to cut loss at this break-even point, I will exit the trade at about negative 100, right? About $100 loss. So in this case, I cut loss early and my loss is minimum. So even if I have to cut loss here at negative 100, that is half of the premium I collect here. Remember, I collect 218, right? 218. So in that worst case scenario, if you cut loss on time, you will lose approximately half of the collected premium. So I collect 218 and I cut loss at 100 here. And if it goes this way, the loss is very minimal. Now, somebody asked me, many of you actually asked me, what if the price stays between the long call and the short call? Long call is 775, which is here, and short call is here, 770. Now, question is, if the price stays within these two, what happened to the trade? Well, depends on how long you've been in the trade. Now, you just enter the trade and the price already moved to that level. While you'll be losing anywhere between here and here. You'll be losing somewhere here, like $100 plus, $100, $110. So that will be the loss. And then if you cut loss here, that will be $100. Yeah. So again, you need to cut loss. In that case, if it moves beyond the break-even point, you need to cut loss. On the other hand, somebody say, what if the price stays between long put and short put? Long put is 720 and short put is 725. What happened to the trade? Well, it also depends on how long you've been in the trade. In a very unlucky situation where you enter the trade and the price already drops to that level, yeah, your trade could be losing anywhere here to here. So you'll be losing about $30 to break even. And if you cut loss here, you'll be losing like $10 or $15. That's it. That's just use the broker platform to simulate your P&L. You know, yeah, this is accurate based on my trading experience. Again, if you cut loss early, following my stop loss rule here, so when the trade hits one of the break-even points, you cut loss, you probably lose about half of the premium you collect. Or you lose less than that. Depends on what side of the trade. So hopefully that clears some of the questions you have. Somebody asked about fee. Yes, it four-legged fee. Four-legged options, you need to pay commission. So it's a commission intensive trade, correct. But depends. If you trade on high premium stocks, the percentage of the commission versus your profit could be maybe 5%, could be 10% maximum. Don't trade this one on the tiny small price stocks because the premium will eat into, the commission will eat into your profit. Yeah, somebody already asked, should I enter this trade when IV is high? Now, high IV is a bonus. High IV is a good thing to have because you likely get a good premium. But if you don't have high IV, just follow the rule here. You need to collect at least $1.80 for $5 spread. That $5 spread meaning $5 difference between the long and the short option. If you trade $10 spread, meaning $10 difference between long and short, then you need to collect at least $3.60, so double. Ideally, you want to collect $2 or $4 for 10 contract, for 10 spread, $10 spread, right? That would be ideal. So in this case, this trade collect more than $2. That is good. Again, high IV is good. High IV means if the implied volatility ranking or percentage more than 35 and 40, that would be a high IV. But it's not a must. It's not a must. As long as you can collect at least $1.80, that would be ideal. Somebody, Iris say, in what scenario will you get assigned the stock? Very unlikely. Very unlikely. Now, why? Because if you cut loss here, right, there are a lot of extrinsic value in the short option, so it won't be assigned. Now, the assignment will happen when the short option is deep in the money and there's very little extrinsic value left. Then you will likely be assigned. But assignment is not an issue. You just sell the share and then liquidate the remaining options because the risk is already capped and predefined. You won't lose more than the max risk. Even if you get assignment, you won't lose more than the predefined max risk. Now, one tip I have for you, if you simulate this trade on Thinkorswim, the difference between these two, the pink curve and the blue curve, is the extrinsic value. It's the time value. Now, if you see there's still a big gap between the two, that means it won't be assigned. Very highly unlikely. Within this also, within this profit zone, the gap between the pink curve and the blue curve is wide, right? There are a lot of extrinsic value in the options. It won't be assigned. But if you let this one run and the time is running close to the expiration, you see the pink curve will fall very close to the blue curve and very little gap between the two. That is where the assignment is likely to happen. Right? So to answer Iris' questions. But don't worry, even if you get assignment, the max risk is capped. Okay, somebody asked, how do we screen for uncontrolled trade? So I leave it to the Thursday live trade hunt. Okay, so that one I will explain. Okay, Stephen said if cut loss, then the price opposite direction, then we'll lose both sides. No, cut loss means you exit the whole trade. You cannot lose both sides. You cannot lose both sides. When the price go to one side of the trade, that means the other side makes money, and you lose only on the side that get challenged, and you close the entire trade. You cannot lose both sides. Uh, Mui Hong said, is it okay to do a boom put spread and a bacon spread separately because it's easier to manage if the trade if I need to close a trade? Yeah, you can do that, but again, you cannot control how much is the maximum loss or how much is the maximum profit you have, because you enter different time, right? The price can move, and then your max loss could be very different. Ray Tan say, can we apply iron condor on indexes to avoid assignment? Absolutely, yes, because index have no assignment, correct. When you open, this is from Kate, when you open an option call or put, you can just stop it halfway in. Yeah, you enter the trade. If you don't like it, you close it. So buy an option, you don't like it, you just sell to close. Or you sell option, if you don't like that position, you buy to close. You can always close your position halfway. Yeah, for those who have not traded option before, you don't have to hold the option until expiration. You can close option position anytime before the expiration if you don't like to hold it anymore. Yes, when you close the trade, you close on for legs together. Correct. Do I need to monitor option every day? Yes. Unfortunately, option trading need monitoring every day. Even like 10 minutes, 15 minutes is okay. You got to make sure that there's nothing like serious happen to your trades. That's normally a few minutes or 10, 15 minutes, just monitoring, it's okay. Yeah. Unfortunately, option trading is something like you can just buy and forget, right? Any capital tax in Singapore? No. Other markets, I don't know. But Singapore, we have no capital gain tax. What app we are using? The one I'm showing you is Thinkorswim on JustSwap. HY Hi Bang, can I ask for boom put spread? Would it be advisable to increase a profit by buying a put at the lower strike price, or wait for the price to move favorably to buy back a put option? Yes, you can widen the spread between the long and the short, but your capital will be higher as well, right? So just keep in mind the return on investment approximately is about the same. You can leg in one to the other, but I prefer to do on together. If you ever roll the tested side, yes, that is more advanced technique to repair iron condor trade. Now, in the lesson, I don't teach it. Okay, Adam doesn't do it. Okay, he wants simple enter and exit. That's it. No repair, no adjust. But if you join my monthly e-gathering, which is part of the Wave Rider, you see occasionally I do the repair of iron condor trade as well. And I do it live, so you know exactly how I do it, and I explain in details why and the thought process. Okay. Would you be able to show iron condor on Weeboon platform? Unfortunately, I'm not familiar with the Weeboon platform, but I assume they should have the same kind of features. So Mitch asked question, if Anconda is better since it collect two premiums on the sell put and sell call, what is stopping people from choosing this over sell put and sell call? I don't know. Maybe they're not aware, or they don't have full understanding of this. This is kind of a little bit advanced strategy, in my opinion. In my first many years, I did not know about Iron Corner. I did not know. So it's very normal for people not to know it. But for those who be trading options like experienced traders or seasonal trader, season trader, Ankono is one of the bread and butters and one of the key strategies they need to have in their toolbox. Somebody say, I work late night shift were ending about 1 a.m. midnight. Is options trading still possible in my scenario? As long as you have like half an hour a day, because as long as you can still monitor the market, it is okay. In fact, I prefer to be in the US time zone because I can hold my option to near expiration time to take action. In Asia, that would be too late, right? So I have to go to bed early. So every time zone will have some advantages and disadvantages. So, but I think as long as you can monitor your trade within the trading time, it's okay. Can I close a trade if I sell option? Yes, absolutely. Yeah. uh, Need to preset stop loss when entering the trade. For this one, you don't need option. We don't set stop loss because option liquidity may not be high as stop, so it can trigger your stop loss prematurely. So we do stop loss manually, and for a reason. This one, the max loss is already capped, right? We know exactly how's max loss. We don't have to be in hurry to cut loss. If you miss it during your sleep, you can do it next day. No problem. For trading option, what platform do I need to subscribe to? I don't know where you are from, but if you can get the Thinkorswim platform from JustSwap, that would be the best. I'm not recommending anything. This is based on my experience. So I like Thinkorswim and Interactive Brokers. So those are the two key platforms that I've been using. I also use Tasty Trade, but the more I use Thinkorswim, the more I like it. Either pre-booker is fine. Very good. Actually, not bad. Yeah. So when you close the forex of Iron Condor, you just do the reverse. What you bought before, now you sell. What you sold before, now you buy. Right? Just do the opposite order. And come to my webinar, come to my e-gathering, come to my live trading. I show you how to do it, right? So, and before that, you have the onboarding sessions from the coaches, and you have many mentoring sections as well. So don't worry if you know nothing about options. No worry, right? If you can understand again 10, 15% or 20% of what I say and Adam said this morning, that is perfectly normal. There are many things for you to learn, right? That's why we design the course in a way that we will mentor you, we will hone hand you, we will make sure that you understand exactly what you're doing, right? Comparing Anconda with calendar, I have all of this in my toolbox, and I also explain it in the e-gatherings as well. A lot of questions you have here, I cover very frequently in the monthly gathering that I have for Wave Rider members, right? So don't worry, I have all of this, right? And I love to spend time with you explaining options. I mean, I don't know what's wrong with me. Every time I open my mouth talking about options, I I feel very hard to stop. I can spend the whole day answering all your questions based on what I know, of course, and I still don't feel tired. Okay, so I don't mind, but we have time to keep up here, so I need to move on. Yeah. Now I show you maybe 2 3 trades on Ancondo that I did recently. I just show you the setup and also the result as well. So the first one I did on Costco, right? COST. That's a ticker symbol. So I entered a trade here with Forex. You can see the entry on April 2nd, right? April 2nd here where I entered the trade. Maybe I make the color differently. Okay, so on April 2nd, I entered the trade here with 4 contracts and Forex, right? I sold 1065 con. I bought 1075 con, $10 above to protect the upside. I sold 960 put, and I bought 950 put to protect the downside risk, right? So that is typical and condo trade. And net I collected, if you combine the premiums, what I paid, what I sell here, I paid what I paid and what I collected here. You see the net premium from this trade. I collected $4.26. Yeah, $4.26 times 4, right? So that's the premium, 400. And then on that day, just explain the setup. I entered the trade on the April 2nd, which is here. Now, you see the before the entry, the setup for Costco has been very consistent, right? Trading in the sideways, in sideways, up, down in a range. So it kind of predefined range that it's been trading. So on that day when I entered the trade, the price was a little bit like at the high end of the trading range, and I entered the trade with these strikes. And these strikes have the profit zone like what you see in the on the screen here, the yellow one. So the higher break-even point is at my short call plus the premium I receive. So 1065 plus $4.26. So that's what I have the break-even point on the upside. Now break-even point on the downside equal to my short put, which is 960 minus $4.26. So that's where I have the lower break-even point, $955.74. So therefore, the box has been predefined, right? The profit box is defined. So as long as the price moving within that box, my trade is fine. Every day brings me some money. Every day brings me money, right? So when you have this trade in, right, you just draw the profit box on your platform like that. And every day when you monitor the trade, you just need to look at the chart in your platform and check if the price still stays within or not. If it goes out of the box, you need to take action. If you go down, breaking below the box, you need to take action. So the way I monitor my trade when I'm in this trade, right? I just drew this box on my chart, and every day I open my computer and I check, okay, after I enter the trade, right? Next day, the price here, fine, up a few points, okay. The day after is down, fine, still within the box. And then up big, but still below my stock, my break-even point. Up further, but still has some margin for error, no problem. And then suddenly the price dropped a lot, but it's okay, still far from my stop loss. But the day after it dropped even further, wow, I need to watch a little bit more. The day after it opened gaps down again, wow, it's close to my stop loss. Be ready, everyone, be ready. But the day after it rebounded strongly, oh, it's good. Relief. The day after goes higher, oh, even more relief. Day after goes higher, even more relief, right? So the way you monitor the trade is every day one tick. You see if the tick is still within the profit zone, it's okay, it's good. So then on May 1st, which is roughly 1 month after I enter this trade, I close the trade because the trade already generated a majority of the profit, more than 50%, right? So you see I entered the trade collecting $4.26, and I exited the trade when I pay back $1.91.4. Yeah, $1.91.4. That is the premium I pay back when I close the trade. So said differently, I got more than half of the profit in a matter of few weeks, right? So times 400, which is 4 contracts, times 100 share per contract. So profit for the trade is $938. And in this trade, I know exactly how much my max loss, right? Which is the difference between the short and the short and the long option, $10, minus what I paid here, but what I collected here, $4.26. right? So this is the max loss of the trade. If you time 400, which is 400 shares, right? 4 contracts, right? You have 2296. You have 2296. That is my capital also in the trade. So now I exited the trade at $938 profit using this premium capital. That translates into 40.9% return on investment in a matter of 1 month. So 1 month, 40%. So keep recycle the money and you make similar trades, right? And then you can see that you can magnify your return on investment significantly. And the mechanism to monitor the trade is quite simple. As I say, right? Just draw the profit box on your screen on the chart. Every day you open your account, just check the price. Is it still within the box? If the answer is yes, close the computer, go watch World Cup. Or go watch Netflix if there's no World Cup match on that day. Yeah, that's what I do. Very simple. Even if you're on vacation or on travel, you can check it on your mobile platform also, because this box will go with your Thinkorswim platform on your mobile, and you can see also if the price still within the profit box. Make sense, everyone? Buying power is the maximum loss. So in this case, this trade blocks me 2296. That is a maximum buying power. If you use IBKR, interactive brokers, they typically block you less. But Thinkorswim blocks you the max loss, which is 2296. So about $2,000 if you use IBKR. Yeah, so somebody asked that questions. So Aaron say, do you divide your profit by the max loss or the collateral you have to tap for the trade? I use a max loss. To be conservative, I use a max loss as my capital. IBKR blocks less, but I just want to be conservative. I use a max loss as a capital. Okay, so can you show how to draw the profit box? Okay, if you use Thinkorswim, it's quite simple. It's quite simple. You know the profit box, the upside, the downside, right? You just go to Thinkorswim here, and let's say go to Costco, and where's Costco? There's no Costco. Yeah, Costco. Yeah, you have a box here. The way you just do it is just to click into the drawing, and then the rectangle, just draw whatever. Sorry, go to the drawing, rectangles, and just draw a. Sorry. So if you want to draw a rectangle here, click and then drag and click, and you have the box. Very simple. Okay, so those are the things that can be answered more efficiently during the webinar, the onboarding webinar, because a lot of questions you have here can be covered during the webinar. Let me use the time here to show you more, right? Because we have quite a lot of things to cover as well. Let me continue. Let me show you another trade. This is on Palantir, TLTR. Similar setup, right? So before I enter the trade on this one. I use Thinkorswim. I enter it on April 21. So here, April 21, I enter the trade here with 5 contracts, and sorry, my mistake. The entry point is here, 30th of March. I entered with 5 contracts and collected more than $2 for $5 spread, right? For $5 spread, I collect more than $2. That's good. 209. So this is what I collected. So this is on March 30th. I entered the trade here. So before that, Palantir bounce off the support, goes up, bounce. So it looks like it is consolidating. So that's the setup. So I entered here when it is in the middle of the trading range, and I drew the profit box. And because I collect 209 here, my profit box is between 127.91 to 162.09 using the same mechanism, right? Short call plus the premium, short put minus premium. That's the limit for the box. And after I enter the trade, the price went up and then suddenly it dropped significantly down. Now, you notice this interesting day when the stock price opened gapping down significantly below my break-even point on the put side, which is going outside the profit box. So by right, I should pull the trigger right here, right? By right, I should pull the trigger right here. Now, thing here is, okay, before I took the action, suddenly the stock price reverse. So it gaps down at the opening, but then it quickly recover and close the day almost flat. And it closed actually slightly inside the box. So before I pull the trigger, before I close the trade, right, the price already recover and stays inside the box again. And that make me hold on to the trade. And sometimes you feel that you find some situation like that. And then the day after, it recovers very strongly. It's a good relief for me. So now the trade is safe because it went inside the box again. And then on the day when I close it on April 21 here, which is 3 weeks after I enter the trade, I close it right here when the stock price is slightly more than where I enter the trade. And the reason why I close the trade about the same, right? I generated more than half of the max profit because I collected 209 and I pay back 88 cents. So I earned more than half of the max profit. For 5 contracts here, that translates into 605 profit. And the max loss in the trade, which is also my capital, is 1455. Right? How do I define the max loss of the capital? Well, $5, remember, $5 minus 209. So roughly about 3, right? Times 500. 5 contracts, right? Right, so that's where I have 1455. That is capital that I use in the trade, and also the max loss. So if you see the profit divided by the capital, that translates into 41.6%. Pretty good. And this is within 3 weeks, not even 1 month. Yeah. So again, if I have to cut loss here, yeah, I would incur some loss. Not a significant loss, a small loss. Yeah. Which I show you, right? If I cut loss on time, the loss will be very minimum. Now, are all my trades winning trades? No, right? I show you one trade that I lost money as well. And I cut loss on time in this case, and the loss is very insignificant. So this is the trade that I traded on CL, which is crude oil futures. So I trade iron condor on crude oil futures. I used to trade a lot on crude oil futures in many years ago. Yeah. So remember what happened during that this time? While we have the war in the Middle East, the US, Iran, and Israel, right? And the oil price has been very volatile. So premiums are good. So I entered the trade on April 22nd. So on 22nd of May, I entered the trade here with 4 legs and 1 contract. Now, 1 contract of oil futures is 1,000 barrel, not 100 shares. This is future. So 1 contract is 1,000 barrels. And we teach you all of this, right? So if you trade euro, you trade Aussie dollars, you trade natural gas, you trade treasury bonds. They have different kinds of contract size. Yeah, only stops at $100 or index 100 points. but other commodities, they have different size. Yeah, so oil is 1,000 barrel per contract. Keep in mind. So when I entered this trade, I collected $2.04. And that makes sense because that is $5 spread, right? Difference between long put and the short put is $5. Difference between long con and short con is also $5. So therefore, I got more than $2 for $5 spread. So that makes sense. So that meet my entry criteria. Remember, at least $1.8. This is $2 more, right? So it's good. So I entered on 22nd when oil price seems to stabilize. So remember, the price broke out on the when the war in the Middle East started, and then Trump twist. So Trump sent a social media post saying, "Okay, now they reached they are they will be reaching the deal soon, so there's some discussion, uh, and then we will likely have the peace talk, and we meet in, I think, Geneva somewhere." And the oil price kind of dropped significantly after that news, and then it stabilized. So I thought that this is a good time to enter iron condor on oil because it seems to find some stabilization, and I expect if the talk will take some time to materialize, then the oil price may just go sideways. So that's why I entered the trade here on that day when price is kind of stabilizing. Now, unfortunately, after I entered the trade, the negotiation was not going well, right? So there's a lot of back and forth. The attack resumed, and both both sides say different thing, and oil price went to the roof again, right? So this is a little bit unlucky. After I entered the trade, the price went up steadily, and then on this day, when I exited the trade, the price suddenly shot up significantly. I cannot remember the news, but there was a news that uh, the peace talk broke out, right? No talk. I going to demolish the civilization of Iran. I will, we will like bomb you like crazy, all kinds of tweet that Trump bombarded on that day, and then suddenly oil price shot up. While as a trader, I cannot control what Trump will do or will not do, right? So I will only focus on what I can do for my trade. So when I see the price action going like crazy, oil price looking like breaking to a new high again, so I a little bit chicken out, so I close my trade, right? So on the hindsight, if you ask me, on the hindsight, I could have waited a little bit more. I could have waited a little more because the price went up right here, very little distance to my exit point, the break-even point, right? So when I look at my trade and I saw price going like that, and I say, "Gosh, it's going to break out and will go out of the profit zone soon." So as a cautious actions, I say, okay, let's close the trade for a minimum loss anyway, because we don't know how high the oil price can go. And I say chicken out, and I close the trade. I pay back $2.06. So only 2 cents more than what I collected. So as a result, time 1,000 barrels. So I lost $20 for the trade. So, and that translates into a very minimum loss, less than 1%. You can see here in the trade when things went wrong, I still cut lot or I still exited the trade at a very minimum loss. Yeah. So that's the gist of iron condor. You get premium, you have wide profit zone, but if the price goes widely one way or the other, make sure you cut loss on time to minimize the loss. Yeah. So now on the high side, when I look back, I say, gosh, if I have held on to the trade, the price reversed back and I could have made all the money, right? So, but that is the shoulda, coulda, woulda kind of argument. And I never look back and feel regret because the action that I took in the past, because I can only take all the information at the time of decision making. And once I made that decision, I live with that. I don't feel regrets. I don't review and reflect that, hey, I should have done this, should have done that. Nobody could know how the price will move on that day, right? So uh, trading, you just need to stick to your trading plan, right? You have the plan that you had, and then you have to follow the plan. Now, very easy, said than done, because you know that the time that you have to pull the trigger to cut loss on your trade, there's always something in the back of your mind, in the voice in your mind saying, just hold on to it. The price will pull back. Just wait for a day or two, right? Normally you see that kind of emotion going on. And I tell you what, it's not a good thing if you not follow your rule. Because if the price breaks out on that day and goes much higher, then the trade could quickly snowball into a bigger loss. And that's the best way to ruin your hard-earned money. I just follow my trade. Fine. Losing some money is fine. I don't have to be right in every single trade. So that's the point. Yeah, so I do have losing trade as well, not just winning trade. Yeah, I make calculated decision, calculated risk decision. Yeah, okay, fine. All right, so now before I move on, I just leave you with one quote from Warren Buffett. You know him, right? So what he said was that if you don't find a way to make money while you sleep, you will work until you die. And I see a lot of people keep working, and they can never retire, right? You need to find a way that your money works even when you are sleeping. And option is the best way for you to do that. The best way for you to do that. Okay, let's just give me a second. Let me see. Yes, maybe Nasri, can you just project that slide? Just give me 30 seconds. Nasri, you just go ahead. Okay. Sorry, I was on mute. So so as I said, most people trade time for their money. And when they stop working, the income stops. The strategies that I just showed you today, the profit box or iron condor, is how I make money while I sleep. Yeah. So I enter the trade as I just summarized what I say, right? Iron condor positions are running 24 hours. Yeah, I'm having dinner with family. I'm watching Netflix or I'm sleeping. They works in my favor. I check my positions for like 10, 15, 20 minutes a day when the market opens for the trades and see if they are still within the profit box. I'm okay. I can go doing something else. I just follow my exit rules, right? And then I live my life. And that is what financial freedom through option looks like in practice. I want to share with you the complete roadmap, what will get you there in the roadmap. The system we built and refined over many years of trading. Let me show you what inside the system. Right. So I want to introduce the ultimate income boosting roadmap for traders and investors. The option wave rider membership. This is a complete system, the same system that generated the result I show you today. It's structured, step by step, fully supported, and let me walk you through exactly what you will get. Now, you get the full 2 courses, option iron shell and option striker, covering 21 powerful option tactics from complete beginner to advanced option strategies. Learn at your pace, learn at your demand, anywhere, anytime. And you get full 1 year mentorship support along the courses. And let me break down exactly what is in each level. Now, level 1, the option iron shell. This is your foundation. Everything starts here, regardless your current experience level. You will start with option basics like calls, puts, how option works, how to set up your charts, and trading tools. Then we move to strategies for investors like cover call, cash secure puts, the cash flow wheel, a very powerful strategy for generating regular income from your existing stocks holdings. And then we will go deeper. Bull call spread, bear put spread. Next, we will have bull put spread, which we cover little today. Bear call spread, which I also cover little today. Technical analysis basics. Bonus content on options assignments. Strategy selection guides. And hedging portfolio with protected puts. For anyone in the room who felt nervous watching me going through the iron condor setup tonight or today, the level 1 will make all of that very crystal clear. You will go step by step at your own pace. With video lectures, you can rewatch it as many times as you need. Now, level 2, option iron strikers. This is where you go from competent to professional, from boy to a man, all right? You will learn the more advanced strategies that I use day to day. The iron condor in the full detail. Calendar spreads, the Moonbang color, the one I invented. You see Bull Put Spread Extreme that Alan created. And a range of specialized strategies for specific market conditions as well. Now, for traders who want to be more aggressive, next one. Yeah, we cover synthetic longs and short. And if you recall, earlier today, Adam covered the synthetic spread. So that will be part of the advanced level as well. Bull market strategy, earning probability spread, powerful for trading around the earnings period. Now, we have the full module for psychology and risk management as well. Because the biggest enemy of traders isn't the market. It's their own emotions. Next, we will also cover rolling options, how to use platforms, interactive brokers, tasty trade professionally, right? How to enhance returns on your ideal cash using the US Treasury bills, the one I use a lot. Together, level 1 and level 2 give you 21 complete option tactics, a full toolkit for any market conditions. Next one. Now, I know some of you are thinking something right now, and I want to address it directly here. You may be thinking, Bang, I'm a total newbie. What if I fail? Or, this looks too complex for me. Or, I'm a very slow learner. Or, what if I make wrong trade and lose money? Tell you, these are completely valid concerns. They are the same thought that I had when I started. They are the same thoughts that almost every new options trader has. And here's the truth. You don't need to have it all figured out before you start. What you need is just a system that guides you through every single step. A community that has your back. Coaches who review your trades, and a structured learning path that give you, take you from where you are right now to where you want to be. This is exactly the option Wave Rider is designed to be. Not just a course, but it's a guided journey. Well, when you join option Wave Rider, you don't just get the courses, right? You get the full year of live online mentorship from Adam Koo himself, myself, and from our team of coaches. Every single component of this mentorship program is designed to help you start profiting with confidence. First, onboarding workshop for beginners. These run every 2 months, live online. Yeah. We walk you through how to set up trading account, how to place your first option order, how to use all the exclusive tools. For anyone who has never placed an option trade before, this onboarding workshop is where you begin. Yeah. Next, second, monthly strategy deep dive sessions, either with me or with one of the coaches that we have. Right. Each month, we do lesson recaps, cover strategy application through details, case studies, and show you how the strategy plays out in the current market life condition. Not historical example, but real current world, example from the market where we are trading right now. So it's a live lesson, not just the theoretical one. Right, next. Third, this is the one that I get most excited about, right? The monthly e-gathering and live trade hunt with me. I do conduct this e-gathering on Zoom webinar live every single month, right? Every month you join me online and watch me hunt for real trades opportunities in the live market. You will see my full thought process, how I identify setups, how I size my positions, how I manage the open trades, and how you can send in your own trade ideas as well. So you send in your trade ideas in advance. I review them on the spot, and if I like the trade, I enter it as well. Right? So I will prioritize the one that has been sent to me in advance. But during the webinar, I also cater new ideas that people ask as well, or people ask me to look into as well. And that is on top of the market updates that I go through every single month. Next one, the option traders discussion group. It's a very active community where you can discuss trade ideas with fellow traders. You also get setups reviewed by coaches. Post your question directly to me and the team and receive timely market updates. You never trade alone. Next one, last but not least, on a quarterly basis, you have trading psychology live classes with Adam Khoo himself. Because as I mentioned earlier, the biggest enemy of most traders is not the market, it's their own mind. Fear, greed, impatience, revenge trading, these psychological traps destroy more trading accounts than bad strategy ever will. Now, Adam's sessions will give you the mental framework to trade with discipline and emotion control consistently. This alone worth the entire investment. Okay, so now let me go through some of the testimonial that our students sent in. So it's from Mai Wong. Thank you for your excellent coaching. I managed to get 37% return for year to date. Looking forward for the rest of the year. Right. Next one from Wendy. Thank you, Bang and Adam, for your guidance throughout 2023 investing and option trading. My portfolio grew 59.38%. Joining your course is really a bless for me. Right? So very solid performance by Wendy. Next one from Gumit. Thank you, Bang, for I completed the last video from October. Very informative to provide great analysis on today's market trend, because I always start the e-gathering with the market updates, right? You are the great mentor helping us all in every step of the way. Your reasoning to take the trade is very affirmative. Thank you for the recap. Option Striker, Level 2, and Option Shell, both are very impressive courses, right? And from Cat, thank you, Bang and Adam, for helping us in this journey. I have enrolled your class 1 year ago, but never do anything about it until this May. And now my portfolio is 23.13% year to date, right? So very good. Right, this is from Tommy. Right, Echo picking top 1% stock that are undervalued below intrinsic value, and I have achieved 34% year to date using mainly BSS, mean bullish synthetic spread, which is the one that Adam talked about earlier today. Cash secure put CSP, CC mean cover call, bull put spread extreme, which is the one that invented by Adam, and crouching bull spread CBS, the one that I created. Right? Thanks to Bang for his amazing. All right, so let's walk you through the exact what you will get when you join it today. Okay. Can you click to show? Yeah. Okay. So first of all, you get the lifetime on-demand access to option shell, and option striker. So 2 levels, 21 powerful option tactics, case studies, and quick reference strategy guides. Right? Retail values is 3,000 497. Right? Plus, you not yet go back. So, plus you will get a full year of online mentorship with monthly e-gathering and live trade hunt with me, monthly the started strategy deep dive webinars, option trading group, right, the Discord channel, quarterly trading psychology with Adam, and onboarding workshops for all beginners. Right, so all of this together, and retail at 3497, as I said. Next one. Now, today at this webinar, the option wave rider membership or mentorship is available for only 2,447 Singapore dollars, which is equivalent to 1882 US dollars, right? And that's 30% off. And you will also receive the bonus for extra 2 months mentorship access, right? So total you have 14 months in mentorship there, and that alone worth 582, right? And you will receive the login the moment you sign up today, right? So immediately you get credentials and then log into the learning platform already to complete your enrollment. Yeah. And then to put the 2447 Sing dollars in context, right, which is about 1,882 US dollar. You think about the two trades I showed you earlier, right? Costco trade, where I get like $938 profit. That is half of the cost of this membership already. And then if you add the Palantir trade on top, 605 profit, well, you almost get the whole thing covered. The system pays for itself very quickly. No guarantee, but you could get winning trade as well. Now, next one. All it takes is just a few good trades to make back on the mentorship program, and we give you everything you need to find them. Okay. Just run through a few more testimonials. So the next one is from Asanka, one of the very active members in the group. So he said, I would like to share my experience through the benefit of option students who enrolled recently. So he enrolled the option 1 and 2, found difficult to understand at first, and were dragging and delay learning for 8 months. But then he remembered Adam say everything started with difficulty, and then he started to learn again. And then he also subscribed to OTP, which is Option Tactic Playbook, which I will talk about, and started trading with Masterclass guidance. Okay, that's what he was right here. I'm very pleased to let you know that my portfolio has grown 28% in the last 7 weeks, purely from option trading, which helped me cover on the cost fees many times over. Then you can see there, people make money very quick after learning. Next one, from Daniel. He said, my account has turned from negative 7.8K realized loss to plus 6.4K realized gain within 3 months, with over 17,000 unrealized gain on the position. So he realized $6.5 thousand gain and still sitting on unrealized gain of $17,000, right? The position that he has not closed yet. So what I have learned from you, Master Bang, from the courses and e-gathering is a complete game changer. Yeah, so that's very powerful testimonial. Next one from CMK. I joined the Wave Rider class 1st of August. The cost fees have been fully recovered, right? So placing a few multi-leg option trade for testing purpose, and the cost fee have been fully recovered, right? And the CMK posted the screenshot of the details of the trades to motivate others, right? So very good. And at the end, CMK also said that Bang doesn't just teach the textbooks theory, right? He walks the talk, right? So I only do with my real money. All right, so enough testimonial there. Just move on. All right, now some of you may be thinking, Bang, I love the strategy and I want to learn it properly. But what if I also want to see exactly how you are personally doing in the market in real time? Why I'm still learning, right? So I'm learning, but I want to learn from you at the same time so that I can cut short my learning curve. What if I want to follow your life traits along with my learning journey? I tell you that if you ask that question, you have a great instinct. And this is exactly why we build the option tactics playbook or OTP. Next one. Right. So OTP or option tactics playbook is a live trading service. So I show you what I trade every single day. It allows you to see the live trading actions that I'm taking every day, and that will help reinforcing or boosting your trading confidence and profits along with your learning. Next one. So every month, OTP members will get a live webinar from me where I cover the full pack like current market outlook, review on the active positions, review the trades that I closed, discussing upcoming trade opportunities, and more often than not, I enter new trades during the webinar as well. You see how I am positioning in the market positions. Every single month, I have this live webinar. Now, on a weekly basis right now, and because I prefer to share, right? So on weekly, not a promise, but I've been doing for quite some time now. I do the webinar, live webinar every Friday now. Now, not part of the package, but something I voluntarily want to do to help members. So I do live webinar on Friday every week as well, on top of the monthly review. So on the monthly review, here's what membership looks like in practice. You see there on the screen. Every single time I enter a trade or I exit the trade, I adjust the position. OTP members receive the notification and see exactly how the stock or the trade setup, the strikes, everything, um, and the premium I receive real time, no delay. You also get to access to my OTP trade trackers to see the trade performance every single day, the complete record of trade that I made, the watch list when I have some trades on idea as well. And then, so what you see there is the notification I send out to members every day. And you receive it, you receive the quick notification on Discord channel on a flash screen basis when I enter the trade. And on the following day, I send out that kind of detailed um, notification as well. Okay, a few more testimonial, and then I will move to the next part. So this is from John. John. So I did my first renewal of OTP. According to my trade log, I make $11,000 on my OTP account of around 45 to 50K. Thank you. So Mahmoud also write to Adam and myself saying, thanks and simply not enough. Thanks is simply not enough for what you have done. Great community. You transformed my account from being a major loser for almost 2 years into a profitable one in less than a year with 27.5% return on investment year to date gain. Okay, so here's the next one. Some of the real OTP trades result that I went out to that I sent out to members, right? So like on August 29, last year, right? I closed Apple trade with 104.7% return on investment, and I explained the setup. I explained the progress of the trade as well. the rolling and the exit point as well. So very detailed trade review. Similarly, the next one, this is on Celsius Holdings when I closed a position last year as well. This is in July, on July 10 last year, about 1 year ago, and made 78.5% return on investment with rollings in between. So you see the entry point, the rolling times, so several times, and the exit point as well. Of course, this is after the trade has been closed, but before the trade, you see the notification of the trade setup, the risk reward analysis, and the exit points, or cutting loss or taking profit kind of details, everything in the notifications. Next one, another trade on Bitminer, so BMNR. So this trade I closed on October 7 last year, and booking 52.9% return on investment, right? And that is also part of the trade analysis I sent to members as well. Okay, so let's now get back to the option bundles. So now we have, so earlier I showed you one offer. Now I have even more attractive offer for you. This is a ultimate option bundles that combines everything. The full option Wave Rider membership, which I talked about, level 1, level 2, onboarding, mentorship, everything, plus a full year of OTP, Option Tactics Playbook, right? So you have both together in one bundle. It's a complete package for serious option traders. You want to cut short your learning curve, you want to learn and practice and see what I'm doing at the same time so that you can learn faster. So it's a bundle. So the bundle, in the next slide, you see the details of the bundle. So total retail value of the bundle, right? So 3,497 Singapore dollars for Wave Rider membership, plus the 3,297 for the OTP 1 year access. So combined, the retail value is 6,792, right? So if you just combine the two services there. And for today, we offer a very special price for the bundle with the Option Wave Rider membership and the OTP together, 35% off. So now we're offering the bundle at 4,410 Singapore dollars, which is about 3,392 US dollars, right? That includes everything in Wave Rider courses, membership, mentorship, community psychology sessions, plus a full year of OTP service, right? From notification, trading log, watch list, monthly webinar, and now weekly. And your bonus with 2 extra months for both Wave Rider and OTP. So total 14 months. Next one. So just to summarize the offers here, right? You have two choices tonight. Choice number one, you subscribe only the Option Wave Rider membership at 2,447. Right, the one below, 2,447. You learn the system, get coach, build your own trading skills over 1 full year. Choice number two, you subscribe the Ultimate Option Bundle at 4,410 Singapore dollars. Everything in Wave Rider plus real-time trade notifications from me so you can follow my live trades while you are building your own skills. There's no wrong or right choice here. It depends on what kinds of learners you are. So both options give you immediate access, right? Both comes with the 14 months of bonus, the 14 month, including the bonus, and both have the guarantee discount availability only for today webinar. Next, remember the bonus I mentioned, right? If you join the option wave riders today, you will receive 2 months extra for the mentorship program, bringing the total month to 14. And that extra 2 months worth 582. Now, if you subscribe to the ultimate bundle, you will receive 2 months extra for both wave rider and OTP at the same time. And that is worth $1,131. Yeah, only available today. Now let me check the time, and then when we share with you 3 trading ideas, and then I will come back with the offer, right? So it's still okay. So maybe half an hour more, right? Then we done. Okay, so here are my 3 trade ideas that I'm prepared already for the upcoming live trade hunt on Thursday using Iron Condor trade. The first one is the ETF. QQQ. Let me show the chart. QQQ. Okay, let me take over this one. All right, let me type in QQQ. Okay, now I'm sharing the chart of QQQ. Obviously, after a very strong rally, the ETF is now consolidating. You see, over the past 2 months or so, QQQ have been consolidating and trading in a range. So this is a good setup for a 9 corner trade, right? Looks like it has some resistance here and it has some floor or some uh, support, right? So I think this is trading in a range. Now, if I think that QQQ going to continue to trade sideways, that could be a very good setup for a profit box trade, which is Iron Condor. And again, on Thursday, I will check this setup again together with the option premiums I could collect from the trade, and I will show you all the details when I construct a trade. And as I said, I will use my real money to enter the trade. Now, not just entering the trade, I will go through this one. If you are in the community, you will see my posting in the community. If I need to give you a watch out on the trade, or when I exit the trade, right? I would show you, and I will show the screenshot of the entry and exit as well. Okay, so I will follow through the trade until the trade is closed. So again, for now, it looks good, but I will need to see if it's still valid on Thursday when the market opens. And I also need to check whether I could get a good risk reward profile. And then when I decide to enter a trade, I will show you my exit plan as well. Exit at this point. If it hits a certain point, I need to cut loss or exit the trade. If it hits a certain profit target, I will exit the trade. So I will show you the full pack on the trade on Thursday. And why do I like to trade QQQ now? Well, not just the setup, but because it is also not having any earnings event in the between in the next 30 days to 40 days. Now, a little bit unfortunate that many stocks in the stock markets will go through the earnings period in the next 1 month or so. So by the time I have the live trade hunt on Thursday, I guess that many stocks would need to will have the earnings in the horizon in the next 30 days to 45 days. And I have fewer choices on what stocks I can trade. because not many stocks that do not have earnings in the next 45 days. Okay, so a little bit more challenging for me. That's why I may trade mostly on ETF, which have no earnings. So that is the first um, trade idea. The second trade idea is AVGO. AVGO is a Broadcom. Now, Broadcom is one of the few stocks that does not have earnings in the next 45 days. So Broadcom earning was out about a month ago, right? So then in the next 45 days, they will not release earnings. So that is the first, safe criteria there. Number two, the setup for AVGO, which is Broadcom, is also very decent. You see, there was time when it was trading in a range for a very long period of time, right? So it's all like it goes like sideways for 4 or 5 months. This is a very good time to do iron condor and collecting premium because the box would have cover on the trading range, right? But then it went through a period when the price shot up, but then quickly retraced down. So I guess based on my thesis, the stock price will consolidate until near the earnings, right? When earnings will be in the next 2 months, so I don't have to worry about it now. So my thesis will be based on my thesis will based on the setup that I think the price will continue to go sideways. Yeah. So that could be a candidate that I may enter on Thursday as well, assuming I get a good premium. And the third idea that I also have here is the ARKK, which is the Arc Innovation. It's Cathy Wood, Arc Innovation. So it's also an ETF. And it has no earnings as well. So it's good. It's safe. And you see that the setup is also valid for a profit box, right? It's been trading on a sideways as very steady on the near the moving average, right? So kind of crisscrossing over the moving average, but overall is kind of trading in a range. So this could be a good setup for an iron condor as well. So I have at least 3 ideas here I could enter on Thursday. And but again, I will need to check back on the premium, see if I can get a good premium or not, right? So just wrap up on 3 ideas here because today the market is closed, so I cannot do anything today. So you need to check the setup again on Thursday and the profile of the trade as well. So come and join me on Thursday where I do live trade and I follow through until the trades are closed. Okay. Now, next one, you just need to make right choice right now. So I have 2 choices there. So you just make the own choice for yourself. The power to grow your wealth is in your hand right now. Because this is a business where the cost of doing business is very low. You don't need to have staff. You don't need to have office. You don't need to have like a lot of operational expenses. You're on your own with your laptop or even with your mobile phone, right? You can do on the go. I mean, whenever you travel, you overseas, you watching Netflix, you watching World Cup, doesn't matter. You can do this one on the go. So very simple business model with very low cost, right? No like legal capital upfront. You can start as low as a few $1,000s to open your account and then learn and then scale up from there, right? So it's in your hand and you just need to take actions, right? So you a few more testimonial and we call it a day, right? So this is from Aaron. So he wrote to me and Adam, thank you for the training. I've done most of your courses starting about 3.5 years ago. This has been life-changing. I now have monthly income from option trading. I wanted to hit 1 million by the end of next year, but I hit it today. Okay. So Aaron, hit $1 million milestone that he set for 1 year, but he hit it earlier. So very good return, 52%, $345,000 profit, right? So from Aaron. Okay, Toby also wrote to us, Bang, thanks for the sharing. So yesterday I entered Boonbang on PayPal, up 120%. One of my best decisions to buy on courses from Adam back to 2019. We will subscribe OTP soon again. The only thing, how I can give back something for you and the coaching community. Okay. This is from Kong. Beat the market for the first time. Right. Thanks for your teaching. I beat the market this year for the first time. And I gain most from your diagonal spread and Moonbang color. Those are my strategies. And it's a long journey and I can't do without your help, right? So it's very good return from Kong. Tian Shong, Alexandra, by incorporating options trading into my strategy, I have not only recovered on my losses, including costs and subscription fees, but also achieved decent profit. My investment and trading journey would never have been as successful without your constant guidance and invaluable lesson. Here's my portfolio performance, like 300%, crazy one. Cherry Fong wrote to us, it took a couple of years, but this slow-witted student is proud to share my 2024 result, 60.7% return across 205 trades with an average win rate of 76.4%, right? 60% plus return on investment. Very good return from Cheryl. Barry Mann, 2024 has been an incredible year of growth and learning in option trading with over $400,000 in close profits. Why? The success has been rewarding. There's been no shortage of lessons, especially around importance of position sizing to manage the risk and sustain momentum. The yen carry trade comes to my mind. I'm immensely grateful to Bang and the rest of the Prina Profit team for their exceptional mentorship, guidance, and unwavering support throughout the year. Right? Shout out to the PP team behind the scene, right? So it's a good note from Barry Mann. Suren also wrote to us, I have achieved 36% return in 2024 and a remarkable milestone of 101% return on my investment since I subscribed to VMI and Iron Striker option courses in 2021. So very good return by Suren as well. Tony, this one I think Adam has shared with you, so I just want to quickly run through it. Thanks to Adam and Bang for their fantastic and easy to understand the option cost. It allows me to retire this year at 49. Wow, very early. After many years of driving taxi. I'm very happy to hear this, man. This is from Denmark. Just wanted to share my experience for anyone in a similar path. Join Adam and Bang's option course in August 2024. Learned an enormous amount, but wasn't easy. Especially Liberation Day last year, April, which genuinely challenging for a lot of us. It took time, some losses, a lot of reflection to understand what strategies actually suit my risk appetite. If there's one thing I would pass on, don't copy someone else's approach blindly. Find what fits you and commit to it. And he has 400%, insane, man. 400% return. Joel, it took me about 3 days to get the grasp of the concept. Then decided to go with only 2 strategies for now, Moon Put Spread and Diagonal Spread. To only collect premiums. After closing some trades last night, I managed to realize $2,600 in profit with a 23.3 starting capital. Very good return. Olivia, sorry, the one had been keep selling Casicule put and collecting premium very consistently every single month, and when she is traveling the world, right? So this one, Adam has explained the full context in detail. Very consistent option and investor as well. Okay, so now we come to the last part, which I will answer more questions. So I believe I have answered a lot of questions, but definitely I will miss, and coach will push the questions to me here in the what is it? They call it Google Sheet, right? So let me open the Google document, and I will answer the questions that push to me here. And in the meantime, I just keep that QR code on the screen here and let you think about what options you want to subscribe to. Again, there's no right or wrong choice. You just choose the one that is most suitable for you. Okay, so let me go through the questions that the coaches forwarded to me. This is from Gregory Dimitrov. So I like Dimitrov as a tennis player. Love the way he played, right? Yeah, agree. Think you may be from Poland as well? No, no, so I'm sorry, not Poland. Romania, no, Romania, sorry. Sorry, I forgot where it's from, right? Gregory, he asked questions here. Bang instead of SPY, why not SPX? So the tax implications are split with 60% considered long-term and 40% short-term. SPY is 100% short-term, and you will pay higher taxes on your return on investment. I think a great questions and suggestion from Gregory. In reality, I do trade SPX index a lot more than SPY. Now, the reason I show you the SPY, because many people are more familiar with SPY than SPX. All right, so it's easier for them to relate to, but in reality, in my actual trading account, I do trade SPX a lot more times than SPY. Not only because of tax, because in Singapore, we have no difference between SPY and SPX in terms of tax, because we don't pay capital gain tax. But if there's a difference in the capital gain tax, then yeah, it makes sense for you to do SPX. But for me, the reason I do more SPX than SPY, because SPX is 10 times in terms of value versus SPX. So instead of trading 10 contracts of SPY, I just need to trade one contract of SPX. So instead of doing 10 contracts on SPY, I just do one contract on SPX. And therefore, I pay only 1/10 of the commission. So I don't need to pay commission for 10 contracts. I pay commission for only one contract. And the other benefit that I like from SPX is SPX is index. It's European type options. You don't get assignment early, right? You don't have early assignment for European type contract. So trading SPX, it's very safe. You don't have to worry about whether it will be assigned or not, right? So that's the great questions and suggestion from Gregory. From Bulgari, Gregory Dimitrov. Bulgari, now I remember. Next questions from HY. Hi, Bang, can I ask for bull put spread strategy? Would it be advisable to increase the profit by buying a put at the lower strike price or wait for price to move favorably to buy back the put option and after selling a put higher strike? I think I have answered these questions, right? You can leg in with one leg first, one option first, and then the other one later. But then you cannot control the max gain or max loss of the trade. And the broker will block you a lot of capital if you have one naked short and you don't have the long one. Yeah. And besides, you cannot guess where the market will move favorably. I don't know who can predict when or where the price will move favorably. Very hard to tell. Yeah. So I don't do that, but I know some people do that, and it's not my preference because I cannot control the max risk, and the buying power can be significant. Yeah. Number three from Boon Sheng Lin. Question is, since I'm Condor involves four legs, if some legs have low open interest and volume, that at that particular trade with all of the four legs manage to be closed at the same time. First of all, I think it's a very valid questions here. So one of the rules that we teach in the membership, the Wave Rider membership courses, is that don't trade low liquidity stocks. So not just iron condor. In any trades, I avoid stocks that have low liquidity. Low liquidity can be low open interest as well. So open interest is one of the element of low liquidity. But if the option doesn't have like weekly options, I also skip. If the bid and ask is so wide, I also skip. Right? If the open interest is too low, I also skip. Right? So this definitely one of the criteria that we teach in any trade, not just iron condor. Yeah. So in that scenario, you don't enter the trade on that particular stock. Jihuo, may I ask what is your win rate for option trading? I normally have my trading. So in most of my trades, option trades, I have the win rate between 50 to 65% on average because I have losing trade as well. So many trades I have like 70% winning probability, but it end up with losing. So on average, right, my trade has somewhere between 50 to 65% win rate. Yeah, so that's normally the case. Yeah. Lee Zhen, hi, Master Bang. Could you please share your top 3 option strategies that you use? Okay, I have 21 in the toolbox, right? But I use the most on first of all, calendar / diagonal. So these to me is the same bucket. So if you recall, somebody joined the black market event last year, I introduced C to D, calendar to diagonal spread. So these are my 2 favorite ones. I also like to use bull put spread, the one I talked about today, right? Bull put spread, sell a put, buy a low put to protect and cap the downside risk. That one is also my favorite. I also like bull bang trade or bull bang color, which is my proprietary strategy, which also be part of the level 2. I also like iron condor, this one. I also like jet lizard, was one of the strategies that I have there in the toolbox as well. So in summary, right? Calendar, diagonal, bull bang color, iron condor, bull put spread, and jet lizard. So those are maybe 6 or 7 strategies that I use the most. JK asks questions here. Hi, Bang. Do we have to pay attention to any technical analysis when we set up for IC beside your rules? In option trading, technical setup is important. In fact, I start most of my trade with technical setup. I will look at the chart. So I have a watch list of stocks, but I will go through each of them and then I look at the chart, and from the chart, I will form my trade. So it has to be a certain setup, and then I will select appropriate strategies for them. Right? So yes, technical analysis is important, but for iron condor, right? I give you the basic one. I think that's maybe enough, right? If you see just from your bare eyes, you see the chart, it looks like it crisscrossing, going sideways, up and down in a range. that's a good setup, right? Whether you want to use indicators here and there is fine, but overall, look at the chart. If it looks like it's going sideways, that is good enough. All right, so those are the questions I have here in my Google document. I don't know if one anything else. If not, I would like to invite Nasri over for some administrative questions, and then I will see you back in the live trade hunt webinar on Thursday. Over to you, Nasri.
Hello, thank you, Bang. Hello, everyone. Can you guys hear me? Give me a moment and let me share my screen. Okay, give me a moment. Let me. Okay, all right, everyone. I think that was a fantastic session from Bang. I think he showed exactly how his profit box strategy allows him to generate steady premium income. So right now, I can still see a lot of questions coming in, especially the admin side of things. What's included in the mentorship, how to access everything, pricing, renewal details, and the next steps after enrolling. So before we wrap up today's session, let me run through the most common questions coming in now, so everyone is clear on what happens once you join us. Yeah. Switch on the chat. Okay, question from Marcus. What exactly do I get when I join the Options with Rider mentorship or the Ultimate Options bundle? Okay, so when you join the Options with Rider mentorship, this is the one at the bottom here, you're getting everything you need to trade with structure and confidence. First, you get lifetime access to options level 1, the options Iron Shell, and options level 2, which is the options Iron Striker. So you will have lifetime access to it, over 80 hours of structured step-by-step lessons from foundation to advanced setups. Okay. And then for the next 14 months, okay, you get 14 months instead of 12 due to the promo that we are having today. If you sign up during this NP Bubble Mania, you get the live onboarding workshop every 2 months, a live monthly strategy deep dive with Bang or our coaches, live monthly e-gathering plus street hunt with Bang, and quarterly trading psychology lessons with Adam. And lastly, also all access to the options traders discussion group for daily guidance on Discord. Okay. So all live session that you can see here 1 year access to basically the mentorship segment of it. Um, the live session will be recorded and will be appearing in your Wave Rider portal. So under the webinar schedule, so that for those who are unable to actually make it during that point of time, you can actually review the lessons again. So not to worry on that. Yeah. So if you miss any session, everything is recorded, uploaded, and we'll post the replay announcement on Discord. If you're joining the Ultimate Options Bundle, which is the best value for today, you'll be having the Options with Rider mentorship. Basically, 14 months of what I actually informed earlier. On top of that, we'll have 14 months access to the Option Tactics Playbook. Do take note for the Option Tactics Playbook, the access will be provided to you if you purchase the Ultimate Options Bundle on 1st of September. Okay. So what does Ultimate Options Bundle include? Again, it includes whatever that I've actually mentioned earlier for the Options with Rider mentorship. On top of that is 14 months of the Options Tactics Playbook, OTP, starting on 1st September 2026. So for OTP, what it includes is that it includes the live monthly premium webinar reports by Bang Van Van, real-time trade notifications for every trade Bang enter, exit, or adjust, the OTP trades watch list, the OTP trading logs, and the OTP discussion channel for Q&A. So for those who purchase the Ultimate Options Bundle, do take note that there's two different community that you'll be having access to. One is for the Options with Rider mentorship community, and the other one will be the Options Tactics Playbook. And for those who subscribe for the Options with Rider mentorship, we have one special committee, which is the Options with Rider mentorship. Yeah. If I join now, how fast can I access from Darren? Access is instant for Darren. So once your payment actually goes through, you'll receive an onboarding email with all the steps from us. Everything you need is inside that first email, that onboarding email. So if it doesn't arrive within 10 minutes, please do check your spam or promotions folder. And if it's still not there, email support at prenarprofits.com and we'll resend it immediately. Yeah. So let me show you an example of the email that you'll be receiving once you enroll to either the Options with Rider Mentorship or the Ultimate Options Bundle. Okay, so if you purchase the the Options with Rider subscription, you'll be receiving this email from us. Okay, that states welcome to the Options with Rider subscription, and in here we'll actually inform you of all the access that you should have access to, which is of course the options level 1, which is the options Iron Shell and the options Iron Striker, and then you'll also be gaining the so-called the mentorship. Yep, all stated here. And then we also inform you on the free 2 months bonus, especially for this anti-bubble mania event. And basically your mentorship will be extended to 14 months. And then you can see here this green button here. If you were to click it, it will actually show you all the steps that you need to have access to the options with Rider. So everything is in this page. So at first you're going to see a disclaimer from us regarding the scammers on Discord. And then if you were to scroll down, in this first portion, you will be actually seeing, you can actually see what are the emails that you should be receiving from us, instruction on how you can actually access to the options with Rider curriculum or the portal. It's over here. There's also video and step-by-step guidance on how you can actually join our Discord community for the options with Rider. And here, there's actually a screenshot of the channels that you should be having, you should have access to. Okay. And then again, while going through the steps, if you encounter any issues or whatsoever, you can just click on this button here and it will pop up a WhatsApp button that will reach to the support at primaprofits.com, and we're going to assist you with your issues that you faced. Yeah. So that's for options with Rider onboarding. And for those who purchase the Ultimate Options bundle, okay, this is the email that you'll be receiving. Okay, so they will actually tell you the two core components that you will receive in the Ultimate Options bundle. One is which is the options with Rider mentorship, and the other one would be the OTP. Okay, so please take note that for the OTP, it will begin on 1st of September 2026. It's stated in the email as well. And on the 1st of September 2026, we'll send you another email to actually notify you on your account. Okay. Here's a access that you should be having access to. So basically all of the Wave Rider mentorship portion plus the OTP. And again, we're gonna basically we also state that for the anti-bubble mania sale, you'll be having this bonus, 2-month bonus for both options Wave Rider and the OTP. So your subscription will be extended to 14 months. I've also received some question regarding about so when will my OTP expire if I purchase the Ultimate Options bundle? So since your subscription will start on 1st of September 2026, so 14 months after 1st of September 2026 will then it expire. Yeah. And then again, here's the green button. Again, will bring you to a different page from the previous Wave Rider onboarding, because for the Ultimate Options bundle, we have a separate page for it. You can actually see all the emails that you should receive, instruction on how you can access the options with Rider, instruction on how you can access the options tactics playbook on 1st of September 2026. Not to worry, in the email that we'll be sending you nearing to 1st of September, will also include this link to this page as well. So you'll be reminded that, okay, you can actually follow the steps here, videos, and then how you can actually join the Discord community as well, and screenshots of how what you will be receiving if you purchase the Ultimate Options bundle. Yeah, you'll be receiving the Wave Rider segment of it for the Discord, and the OTP part of it for Discord. Okay. Now let me show you. Okay, so for those who purchase either the Ultimate Options bundle or the Wave Rider, the immediate access would be the Wave Rider segment, which is you can actually have the view the pre-recorded videos, on-demand videos immediately. So this would be the first thing that you'll see once you log into your portal. Your portal, and then you will basically see these 5 curriculum under it. Okay, so there's actually the Options Explorer webinar recordings and the Options with Friday webinar recordings. So for skills revision and onboarding webinar, the recording will be uploaded here. Okay, for the skills revision for level 1 strategy, the recording will be uploaded here. For level 2 strategy, which is the Iron Striker strategy, the recording will be uploaded here. So we'll keep it separate for easy reference. Okay. Then options Iron Shell and Iron Striker. So basically these two are the level 1 and level 2 where the on-demand course videos are. You can actually take your time to see all the on-demand course videos here. Okay. Sorry, forget to mention regarding about the recordings, the past recordings are also here. So if you wish to actually see the past onboarding videos, okay, you can actually watch the replays over here as well. Yeah. And then the options with Friday mentorship portal. Okay, so I would suggest for those who purchase the ultimate options bundle or the options with Friday, once you log in, okay, please go to the mentorship portal first. Okay, so in this mentorship portal, you can actually view the video, like an onboarding video from us on how you can actually get the most from this mentorship program over here. And then there's also a step again, besides the onboarding page that I showed previously, we've also included how you can actually join the Wave Rider community here. For all the webinar schedules that I've actually informed you regarding about the onboarding webinar, the live skills revision, the live e-gathering, all the schedule will be here. So you can actually take a look at the schedule here. You can also download the schedule to your Google Calendar over here. Okay. So everything is here. So everything you need for the options with rider, it's all here. You can just follow. Yeah. Let me also show you. Okay, so let me go show you the upcoming webinar schedule. So for those who already subscribed to the Options with Friday or the Ultimate Options Bundle, um, please do look forward for the upcoming webinar schedule that was going to be happening real soon for those who actually subscribe today. On the 20th of July, there will be a skills revision for Bulbang and Bulbang Caller. So one of our coaches will actually assist in doing up this webinar where you can attend to and ask questions. On the 27th of July, we have the market update and live trade validation by bank. So this is the monthly affair. So on the 27th of July, we're going to have one. On the 3rd of August, we have the skills revision, basics call, puts, Greeks, covered calls, and CSP. So basically, these are the lineup for up until September. We have up until December, but for this slide, I just put it up until September. Yeah. So So again, for those who are interested in purchasing and grabbing the exclusive offer plus the bonuses for this anti-bubble mania sales, please take action right now. For those who are interested in the ultimate options bundle, which is the best value offer, you can scan the QR code here, the yellow portion of it. Scan the QR code here. And for those who just wants the Wave Rider mentorship without the OTP, you can scan the QR code here. Okay. Let me see if there's any question. Will this still help me if I'm new to options from Lian? Yes, definitely. But it's not only for beginners, it supports all levels. So if you're new, Iron Shell covers all fundamentals clearly. So onboarding workshops help you get set up fast. The community and live sessions help you build confidence. And if you're more experienced, I think the Iron Striker takes you to the advanced setups and refinements. The monthly gathering, deep dives, and trade hunts will definitely sharpen your execution as well. And if you're joining the Ultimate Options Bundle, you also get the OTP segment of it, which is the bank's premium report, real-time trade notification, OTP discussion channels. So regardless of experience, you get a full system from foundation to mastery. Yeah. How much is renewal next year? So this one depends on which option you're referring to, Mailing. So if you're joining the options with Friday mentorship only, your renewal is SGD 1223 per year. Do take note that the regular retail price is 3497. So as an existing subscriber who is renewing, you'll be getting about 65% off for the options with Friday for the second year. Okay. And if you're getting the ultimate options bundle, then you have two renewals for the following year. One is the options with rider, which is the SGD 1223, which is going at 65% off retail price. And the next one will be the renewal for the OTP, would be SGD 1978, and it's retailing at 3297, about 40% off. So whether it's the mentorship alone or the full bundle, you're renewing at a significantly discounted rate compared to retail. Yeah. Question from Natasha: is there any bonus if I join today? Yes, during Black Market you get extra 2 months free for those who subscribe to the options Wave Rider. You have 14 months instead of 12 months, so 2 additional months free of Wave Rider. And for those who subscribe to the Ultimate Options bundle, you'll have 2 months of Wave Rider free, and also an additional 2 more months for OTP. So 14 months for both Wave Rider and OTP. OTP the access will be on 1st of September 2026. Okay. I just subscribed to the Ultimate Options bundle. What if I can't attend the OTP monthly premium webinar? No problem. You'll be getting invited to every session through Discord and email. However, if you missed it, right, the recording will be uploaded to the portal and we'll announce it inside the OTP Discord channel. Yep, so not to worry. For OTP, for those who purchase the Ultimate Options bundle, you'll have access to the Wave Rider and OTP. For the OTP portal, it will be separate. It will be a separate portal from the Options Wave Rider, and for the recording will also be uploaded on the OTP portal. Yeah, for those who are unable to actually make it. Will I get reminders for all live sessions? Yes, you receive reminders as well. Besides the schedule that I've seen just now inside the portal, not only the dates are there, the time and date is also there. You also receive reminders through email and Discord every live session. So, and once recordings are uploaded, we'll post the replay announcement inside your mentorship or OTP channel separately. Will today's session be recorded? Yes. This session will be recorded. Everyone who registered will receive a replay link in your email. And you'll be able to rewatch, I think, Adam's session earlier and also Bang's session for a limited time. So don't worry if you join late or miss a portion of it. Mhm. I'm a current Wave Rider subscriber. Can I purchase OTP a la carte? Yes, you may purchase OTP a la carte. Do drop us your request on the Q&A. We're gonna share you the exclusive link. Yeah. See if there's any. Do we have to pay full payment today, or can we secure to the offer by paying the deposit? We only accept one-time payment for our courses, mentorship, and playbooks. So yes, you will need to actually secure the full purchase. Sorry, make the full payment today if you'd like to actually purchase it today. Right. Okay, I think that covers the main admin question coming in from Bang's session. Again, I would just like to, let me cancel this. Again, I would just like to actually do a quick recap so everything's clear before we move on. So again, if you're going for the options with Rider mentorship only, you get lifetime access to options level 1, which is the Iron Shell, and level 2 Iron Striker. You get all the live coaching, e-gathering, street hunt strategy deep dives, and psychology lessons. You get full access to the OTP discussion group for support. And if you join today, you'll enjoy 14 months of the mentorship instead of 12. That's your ABM, the anti-Babel mania bonus today. Okay. And if you're going for the ultimate options bundle, which is the best value offer, the value is even stronger. You get everything in Wave Rider plus the full options tactics playbook subscription. Also extended to 14 months. So 14 months for Wave Rider, 14 months for OTP starting on 1st of September 2026. Okay, it's the most complete package for the ultimate options bundle. As if you want tools, alerts, watch lists, and real-time insights on top of the mentorship, this is your basically the choice that you need to go to. And if you're ready to move forward, again, scan the QR code on your screen or click on the link in the chat that my colleague has sent. Okay. So, all right, everyone, I think that brings us to the end of the Anti Bubble Mania D2. Again, thank you for spending the day with us and for the amazing energy across all the sessions today. Before you go, a quick reminder, Anti Bubble Mania Day 3 continues on 15 July, Wednesday at 8:30 p.m. Singapore time with a very special live session from Elson. So, Elson will be doing a live trade hunt to spot and profit from the AI menace manipulation traps. So in this webinar, you'll be watching a former prop desk trader who's made over USD 8 million in trading profits execute his 4 strike bar strategy live. He'll show you how to read the footprints of the big players, identify early breakout opportunities, and avoid the manipulation traps that catch most retail traders at the top. So mark your calendars, set your reminders, and we'll see you back here on 15 July at 8:30 p.m. Singapore time. Okay? Okay, thank you everyone. Enjoy your evening and see you on day 3. Bye bye.